And today's session is more of day trading for those who have wanted to do day trading. The same skills we learned today, you can also use for capital gains. Because day trading is more of a capital gains. So you buy low, you sell high. So even if you're looking gain through price movements, whatever we run through session, it's applied even on long-term capital gains, where you take a profit ends and when you're in a profit. Ideally, actually, the way I've structured the demo, it will fit more of long-term capital gains, but you can always play around with intraday. It's called intraday trading. This feature, you can only find it in broker platforms. I don't think it is there in ZD. Most of the broker platforms look like AIB Digitrader or AIB Online Portal. Most of the brokers have a similar platform, so you can use whatever you run today for taking capital gains, so that you don't have to keep on seeing paper profit. But remember, when you're taking profits, you may also want to build your portfolio for long-term wealth. So nothing stops you from having a portfolio that you always take profit once in a while, and also a separate one where you invest for long term, especially for those who bought at lower prices. If you ever bought your shares at lower prices, then hold those ones as wealth building. For now, for those who are getting in, small capital gains because prices are way too high. We never know what will happen in the next management at NSC. We don't know how long Mr. Mwiti's tenure may run. He's the controller, and every time there is a change at NSC, everybody comes with their own changes. But we have seen what he has done. Previously, it used to be held by Mr. Odudo, Jeffrey Odudo, who made sure NSC had digital trading. He's the one who introduced digital trading at NSC. For those who are joining, we have not started. I'm just giving a brief as we wait for them to come, then we start. So as I was saying, from the current CEO, Frank Mweti, he has brought in one share trading. I wouldn't credit him to ZD because ZD is coming from a history. I don't think there is anyone who can own to that platform apart from Safaricom. It has a history before it was hurriedly launched. So for him, I would credit him with one share trading, and also ensuring most of the stocks at NSE have been onboarded on MSCI Frontier Index. It has various components, and that's why you have been seeing the market 2025, 2026 rallying up because of foreigners. It has nothing to do with one share trading played a small role. ZD, I don't think there is any effect. Actually, you'll be shocked. It has no effect in the markets. Yes, I repeat again, ZD doesn't have, it has a zero effect in the market. Why? Them they are reporting in terms of number of trades. They never report volumes because I think it would discourage people. So for ZD, I don't think it has any effect. So from Frank Mwete, I would credit him with one share trading, which was wrong way overdue. He really changed the market. And he has opened the market now for anyone. There was Jeff Odudo, who introduced digital trading. He's the one who approved the first digital app in the market. That is AIB Digitrader. And he helped innovate around it. Then we had Peter Monge. He's also credited with also onboarding AIB Digitrader as the first platform. Jeff Odudo came in and approved the digital account opening. So you have seen that cycle. And previously there used to be other CEOs who have also brought in other changes. But those are the ones I would first credit to the changes you have seen. From the digital era, go to account opening where you don't need to walk to a broker, and now to where you can buy anything and everywhere. And I think they also, maybe this is an insider, a proposal to extend the market from 8 to 5, 8 a.m. to 5 instead of 9:30 to 3. And I think that will open up the market even to the people who are always busy in the office. They also have that window trade, and that may bring in more investments. Also, if you look at US, at around 4:30, that's when their market opens. So it means if we extend our market to 5:30, it's like now the foreigners has an opportunity to come in when the market is about to close. And then as we also switch to international market, then you have so that cycle of trading. So I think there are good changes that are coming to NSE. And let me see if, let me just give 1 minute. Then we start. So as I was saying, for those who are joining, we have not started. I was just giving the story behind what you are seeing in NSE. First, digital platform, then reduced account opening to digital, where you don't need to walk to a broker and wait for account to be opened, and also go back to the broker issue trading instructions, wait to be confirmed whether you have traded, calling broker to get your portfolio valuation that is done with. Then that time you used to have two boards where you'd put a minimum of 100 and the next board where you'd trade any amount of shares. That was removed. Now you can buy any shares. And as I have said, in near future you see now extended trading hours. The reason why I'm saying this, when they extend trading hours, it has implications to you as a investor. Currently, I think I've talked about something I usually call chaos window. That is usually between 9:30 and around 11. Remember 9 to 9:30, we'll come to that. 9 to 9:30, that time you're allowed to submit limit orders with a price. Then after 9:30, that's when the first trades happen. Then after that, now continuous trading. If you have ever observed market depth between 9 and 9:30, price looks jumbled. You find on the bid side, there's somebody who is selling at 10, another one 5, and another one 7. Then on the sell side, you find somebody selling even at 2, another one at 50. Prices looks jumbled up. But at 9:30, when market opens, you find all those are knocked out at the most favorable price. Once they are knocked out, we have the market orders which now start to clear from 9:30 to around 11. All the system orders, market orders which had been submitted to brokers are sent. They come clearing anything on their way, buy side, sell side. That time you see the graph fluctuating. Then between 11 and around 2:30, that time there is usually a stability. You will not find that graph fluctuating unless it is a volatile stock, which is a candidate now for what we are running today, day trading. Then from 2:30 to 3, for those who are joining, we have not started. Now from 2:30 to 3, that's the time market starts to close. You find that's the time most people cancel their orders. Those who had placed their orders, they start cancelling. Institutional trades, they are cancelled. Now between 2:30 and 3, you find again, that is another window where there is a lot of volatility. Because remember, as they cancel, they are opening up spaces. There are also market orders which come in hitting any price. Remember, at that time, people are also in a hurry to buy and sell quickly. So between 9:30 and 11, there you can get good prices, but risky. 2:30 to 3, again the same thing. And I hope now you understand why. The early morning hours, just market clearing, market orders. And people in a hurry to buy, they go back to their work. 11 to around 2:30, market is stable. If you want now to gauge whether you can buy low or high, then you can tell around that time. Then 2:30 to 3, their market is a bit volatile because most people start cancelling their orders. Those who usually put directly to the trading platform, and also us who come through the online platforms. There are those who are very curious. They would want to cancel before maybe they are hit by the wrong prices. So they cancel their orders, opening spaces now for fluctuation. So between 2:30 and 3, and also 9:30 to 11. That time you are guaranteed you can hit very low prices if you are buying and high prices if you are selling. That's why I always insist on GTD. We run all that today. GTD, good till date. You leave your order there. Leave at a favorable price, even if it doesn't come down to your price, there is the next day. But again, I think from the training we have gone, by now you should be able, for those who have attended those training, you should be able to gauge what price can execute easily. So we had not started, I had given some time for others to join. So I think now we can start. Let me see on the chat whether you can hear me. Or even by, yeah, okay, but yeah, I can say, thank you. So I think let's go straight to the training today. So today I want us to go through day trading, made simple. I think you have already seen intraday and you don't know what that functionality is for. That's for day trading. And if you used wisely, you can use it for long-term investment, not just day trading. Initially, I used to insist on delivery because we are just new. Some of us are just new in the market. If you start playing around with intraday, you can easily mess yourself. So that's why we had started with delivery, where you buy and wait for shares to settle. Otherwise, using intraday, you can easily buy and sell same day. Or even if not buying and selling the same day, you can place an order that can execute after GTD at the intraday. Then the same day it executes, you put a counter trade, still at the intraday to sell. Then you put the highest price. That's how gold trades, GLD and SMWF. You see some of the stocks that you can also do with that strategy. That is one of them is BAT. BAT is a good, as long as your region allows, then BAT is another stock. Unfortunately, also EABL. So if you are restricted by the region, then you are missing those two. You can only play around with Stanbic, Stanchart, and a few others. You will see some. So today, we also see how to build a strong portfolio while taking profits. Remember, nothing stops you from taking profits. Even if I always insist, don't take profit, there is a reason. Most of us, we base sell decisions based on what broker have recommended. Based on broker recommendation. Then, they tell you to sell a share. You go and sell. Like now, I have seen, unfortunately, from where I work, AIB Access, recommending a sell for bank stocks. We are headed to results announcement. You have seen just from the first company that announced EABL, now all companies are announcing increased profits, increased dividend, good results. The ones which are remaining and the ones that you have been told to sell, what will happen when they announce good results? Prices will go up. So if you sell tomorrow, next week now they'll be telling you to buy. You're buying now at a higher price. Notice that confusion. You bought shares at a low price. You have made gains, yes. Somebody have told you to sell. You sell. Next week they tell you it is a buy. You buy. Prices go up. And you're told to buy back. No, you're buying now when they are at their highest. Remember, this market, anything can happen. Prices can even dip the same day you buy back at a higher price. Now you panic. Yet you had a portfolio which you would have waited when the prices go way too high. It is you now to make that decision. Am I willing to take more risks if I'm taking capital gains, or do I wait? So when you see some of these recommendations, always rush back to your portfolio. Check. Am I even in a profit position to sell? Is this profit even enough? You could have bought just last week. Price have moved with 1 shilling. You have not even paid levies for the sell side. Yes, it is showing us more profit. But remember, in portfolio valuation, you only factor the cost of purchase. If you go to your portfolio valuation and average price, it only includes the cost of purchase. That's why that price is not the same one as you bought at, because it includes cost of purchase. Market price doesn't include cost. So even if it's showing you green, you need to factor on the sell side commission and brokerage. So if you are being told to sell, yes, it is in a small profit, but immediately you sell, it wipes out your profit. So the reason why I usually hold these trainings is because most people, investors, they have always reached out. Such complaints. We have been told to sell, I sold. Now I'm being told to buy at a higher price. Why was that recommendation done? Remember, they have to give a recommendation either way. So before you make a decision to sell, first thing is your portfolio valuation. And you don't need to take whole profit. So you're taking just small profits, leave the others, and don't withdraw. Buy back. We've seen how you can combine intraday trading with wealth building. Why? Remember, at the intraday, you're making profit. Reinvest that profit for long-term investment. Play around again with the same capital for intraday, profit, long-term. This long-term is a dividend. So you're using profit to grow stock that is giving you dividend. When you get the dividend, now you can decide to use that now dividend to even play around with intraday properly. Get gains again by dividend. Or you can even decide this dividend, let me even buy more of that dividend stock or a different dividend stock. As long as a stock is not giving you dividend, that should not be in your portfolio forever. That's a share where you gain profit, capital gains, and you sell immediately. Buy another stock, hold maybe for some time. When profits are good, come back. Let's say now you buy like housing finance. It doesn't give dividend. You have a good profit, let's say of 50,000 in profit. There is no need of holding on that share. If it falls, then remember you are losing. If it is a different stock, that's another story. If it is a dividend stock, even if it falls, you have a dividend. Price will still come back one day. So for dividend stocks, never be worried whether you are taking profit or not, whether price goes down or not. It will always come back as long as the price has not gone way too high. There is a site, stockanalysis.com. I'm still following up with NSE to see why they are not showing historical data. Hopefully NSE didn't limit that. Or they could have moved it to pro account, which then would be to a disadvantage. But I believe even tradeview.com have those graphs. Most of the international sites, they have those graphs, or it could be a temporary issue. I'll just check with NSE this week whether they managed to identify, because they're the providers of data to stockanalysis.com. It is a good stock that you can always track prices and tell when the prices were too high and whether the current prices are headed that direction, so that you start preparing yourself. When prices are way too high, just sell off, as long as shares don't start issuing splits. If you start seeing share splits in the market, don't even try to sell any share, no matter what profit. No matter what profit. We have not started for those who are joining. I'm just going through just a basic understanding of NSE so that we don't make mistakes. So when you see a sell recommendation, always ask yourself, why am I selling? Share splits is where, let's say, let me give you a good example, Equity Bank. It is at around 70s, 80s. They decide, instead of making our share very expensive in the market, why don't we give additional shares to the shareholders, but reduce the price? So you're reducing the price with, say, a ratio of 4 from 80, that is, it comes to around 20. Then you multiply the number of shares each investor has times 4. So the valuation doesn't change, even at NSE, but it makes the share cheap. At that cheap price, you can still buy even more. It happened one time, I think, way back in 2019 Soko. Equity Bank. There's a time they did a share split, and I can see that now happening with these high prices. So if you see share split, even if the share is high, however high, just buy to get that split. Because when the price goes down, remember the share price will also rally up again. So when it rallies up again, you are in a profit. For those who bought equity a long time ago, I think they have made so much profit just by being patient. In the market, it only requires you to be patient. So I think we have enough quorum. I can just start. My name is Peter Chege. I work with AIB Access Africa. I'm the head of product development and innovation there. But these trainings are not linked to AIB Access. It's for everyone and absolutely free. Absolutely free. So today we run day trading. That is where you can buy and sell shares the same day. There are platforms that allow you to do that, mostly broker platform. For ZD, unfortunately, it's not there. But hopefully, when they bring it with the way it is working with a broker. Because ideally, in NSE, you can't make profit by price movement alone. I won't try to you. The other technicalities behind it. Then also how you build a strong portfolio while taking profits. Nothing stops you from selling your shares when you are in a profit. So we'll start with creating Watchlist, and I will use AIB Digitrader. So for those who are new, shares is where you become a shareholder. When you buy shares, you become a shareholder. Ideally, if you're buying at NSE, you are buying out an existing shareholder. Like what government is doing with Vodacom. Government is selling their shareholding to Vodacom. So in NSE, somebody is selling the shares to you when you buy. So you become the new shareholder, you pay them, they get out. So that's the basic understanding of shares at NSE. Buying out an existing shareholder at a profit. So them, they are buying at a profit, they get out. When you become a new shareholder, remember there is the money that you paid. You need your money back one day at a profit. Either through capital gains, also selling to somebody else at a profit, or by taking dividends without selling. Then your portfolio is just left there with price movement. In NSE, we have different entities. We have you as the client, who is the investor. You go to a broker who is mandated to open CDSE account, take orders for you, and manage your account. You tell them, I want to open CDSE account. So they open an account at CDSE. CDSE is different from the broker. That's a totally different entity. So you have two accounts, a broker account and a CDSE account. So broker account holds your cash, CDSE account holds your shares. Once it is opened, you need to trade. You can't go to NSE. Again, you go to the broker, you give them the order. They submit the order to NSE. CDSE, they will submit all shares they hold for all clients to NSE. Those who want to sell, they also submit the order. You buy and sell, match the price, execution happens. Shares move at CDSE from the person who have sold to you, the new buyer. Then at broker level, money moves from you buying to the person who have sold. So the broker can pay the person who have sold the shares, and CDSE have the shares for the new person who have bought. This market, because now it involves money movement, it also involves shares. It needs to be regulated. That's where CMA comes in. It oversees the whole market. The trading company, the company that you're buying shares at, has no role at NSE. It has the registrar who manages everything at NSE. Dividend payment, bonuses, AGMs, anything in NSE, it is the registrar who handles. So that's just a quick round of NSE. Investor, broker, CDSE, NSE, CMA, registrar for the listed company. And of course, there is now that company you are buying from. So when you're buying, you either go through the manual route where you go to a broker, fill in form, or you send an email, or you go to their web portal, you submit the order where you can't see the market. That is a manual process because they have to submit that order elsewhere. Or you have digital access through a broker. Or even third-party platforms like Dosika, My Stocks, or even ZD, all those are third-party platforms. They're not owned by any broker, but they connect through broker to access NSE. There is no app that goes straight to NSE. If there was, it was Dosika, but again, Dosika had to pass through AIB to NSE before other brokers came in. Even ZD, it started as Mari, which I think after Safaricom had issues with Gegis because of the Mari money market product, FAD product, they discontinued and decided to go with ZD. They bypassed AIB and went with Kestrel. It was supposed to be AIB and Renaissance Capital launching that product. But one of Renaissance Capital, you have already seen him, hijacked the process, went with it, bought Kestrel, launched, which is good for the market, but bad for the industry. Good for the market, bad for the industry because it creates mistrust. So those platforms, they must connect through the broker. So you may find they miss some of the functionalities that you find from the broker platform, because broker platform mirrors what is at NSE. So if you're using any product that looks like AIB Digitrader or AIB Access online portal, all those have the similar functions, which I'll go through here. Most of the brokers are on that platform, so whatever you do here, you can do from the broker you are in. Only move from the broker you are in if they are not able to give you the services you need. And also, commission-wise. So within the digital platforms, there is a screen called My Watchlist or Watchlist. I'll come to that on the app in the portal. So Watchlist is the list of the stocks that are trading at NSE, which helps you track price movement, volumes, and also trades. Trades here may mean foreign participation, institutional and retail participation, sector-wise analysis, and also other key patterns that can help you make decisions, like order entry and order queuing. All that you can find at a watch list. However, the watch list is supported by other screens like market depth, which then for every bid and ask or offer you're seeing on the watch list, it has the corresponding order book or market depth. It's one same thing. Order book, market depth. Because order book you find it in ZD. It's only that they decided to name it otherwise, but it's one and the same thing. Market depth, order book. All the list of the orders in the market, buy and sell, which have not matched in respect with prices and the way they are arranged. It also has another screen called sector-wise list that gives you now per sector and how it is performing. So with those screens, you can easily make a buy and sell decision. So watch list of stocks, then it is supported by market depth or order book. On the online portal, you have also sector-wise execution and also trade executions. Those are some of the screens you'd want to always watch to know when the market is moving and why. So watch list will help you focus on opportunities without having to go through the entire market. Remember, if you want to know the stocks which are moving, you have to scroll down every stock. You can always create your own watch list. Just take whatever you need. I will come to how we create that. So helping you in focusing your attention on opportunities in the market. When something is announced in the market, add it to that watch list where you can easily quickly go to that stock, see how it is performing, and make a decision. Rather than going to the whole list, which also includes some of the stocks that have been suspended. Then when market turns red, you panic because you are seeing all arrows pointing down. Well, in this sense, it's just maybe one announcement in the market that turned the whole market. Well, if you are to go to that specific stock, you may find it's not affected like other stocks. Maybe it's just temporary. Like what happened when government was announcing KTC IPO. You saw that morning prices on Monday, prices dropped just to create that panic. But then Those who panicked, they sold at losses. Then you can always create several watch lists where you separate potential trades. That is stocks you don't have in your portfolio but you want to buy, and stocks you have in your portfolio so that you can manage them separately. You don't want where you have, let's say, Safaricom, Equity, and Absa as your watch stocks. Then you have, let's say, Uchumi and KQ as your portfolio, and you want to put all of them together. Remember when the prices of Uchumi and KQ drop, you come and see that red within the stocks. You panic, you not even concentrate on other stocks. But if you are to separate the two, you would know the stocks that you're watching are doing well. Maybe those two others, they are not performing well. You can even make a decision. Let me add these which are doing well. Then when these two perform, I can just quickly remove them. But what if you have everything like the way it is displayed currently? I will show you in the platform. You end up panicking, you don't buy where you have opportunities, you lose good entry points just because of panic. I've seen it where you buy a stock today, tomorrow you want it to be in green. You actually want to see the profit. NSE and even international market will shock you. You can buy and it continues to be red for quite some time, depending on the direction of the market and what is happening. Remember, nobody can control what is happening within the company, what is happening in our political environment, and what is happening within the regulatory environment. Because those are the ones that affect our sentiment. You all want either to buy or you all want to sell, or there is a balance in the market. So when you buy shares, always have a watch list. And even if it is showing you red, even if you go to your portfolio valuation and it is red, don't panic. Don't even look at it. I always advise, when you create those watch lists, don't even go to your portfolio valuation for quite some time, unless you need money. Use the watch list to track where the market is going. If they are turning all green, you know your portfolio is already in green. Even if they are in red, you just assume your portfolio is in green, even if it is in red. Because once you go in your portfolio, you panic and start selling at a loss. Even if market drops by whatever percentage, never be quick to sell. 2024, most people panicked, went and started to sell. Market dropped. They sold at losses. Remember who is buying? Foreigners. Honorable Dinyoro also told you something, and that clip have already gone viral. We could be having Kenyans who are foreigners. So it could be a Kenyan like you who is buying as a foreigner at lower prices. They would wait you for at the top, sell to you. You know, for us Kenyans, we just wait for prices to go up. That's the time you want to get in. Look at Absa. When it was added to MSCI index, even before, it was trading within the same price it is trading. We have not bought. Remember, foreigners, they are buying quietly. You will never see their trades. Trust me, you will never see a foreigner trade. Even if you go to that screen for trades, I will show you. You will never see. Because trades happen in a millisecond, so many of them. You will not be able to see 1 million shares trading. Yet they have traded. But if you scroll that screen properly, slowly, you start identifying those gaps. They buy quietly. By the time you realize, we are debating whether it will go up or down. Another 32, will I buy, will I not? 34, will I buy or not? 36. Then a news comes out. They release good result. It shoots from 34 to 40. That's the time you want to enter. Foreigners, remember, they have made per share 8 shilling. See, they are waiting at you. 40. They sell and then review. As you gabble at the 40, you panic, you want to sell, you push prices again down. They buy again back. Foreigners are never in a hurry. And most of them, it's because they trade through the broker traders. They usually have these watch lists. They have created different watch lists where they can easily identify opportunities quickly without having to scan the whole market. Whatever is not trading, they remove. Whatever they are not even supposed to trade because of the region, they remove. Shares which don't give value, they remove. They are left with one or two watch lists. Then they have the main one, just for scanning once in a while how the market is performing. So there are different types of watch lists you can create. It's not just these four. It's not just these four. There are many. It all depends on your creativity. I'll just give you a sample. We will then create, as you can see there, on Digitrader app and also on online portal. So that if you have the app, you can easily create. If you have the portal, you can easily create. So you can have one watch list, which is the main watch list, which has all stocks, all active stocks. If you track the most expensive stocks which trade frequently, you can have all of them there. Blue chip, high liquid stocks. If you also want Akina Uchumi, KQ, put them. That forms as a NNC market overview. It gives you overall movement in the market, where you can quickly go and see how is the market performing, which stock looks like it will gain. Just to identify those quick flips in a day. See how different stocks in different sectors are performing. Then you can decide, maybe I can pick two and put them on another watch list, which now I'll be tracking. If you are a short-term trader or a trader, trader is anyone who is looking for capital gains. You are not interested in dividends. It could be day trading, it could be long-term trading, where you buy low, you sell high. So if you're an intraday trader, then you can create a trader watch list, which you just focus on shares that move in price. You don't want to have Akina Uchumi, Eveready, even some of these stocks like Akina Co-op, Absa, in your trader watch list. They will just clog your watch list, and any green will think like the prices are going up. Unless you buy huge volumes, those shares you can't get enough capital back. Any share that is moving with 1 shilling, you take time as a trader. And that's why you find that NSE people lose confidence in trading. Because you want to buy a stock that is meant for long term as a trader. Trust me, some of these stocks you will wait. That's why there is a difference between day trader, long-term trader, and long-term investor. Those are three totally different people. Long-term investor, they don't care about the prices. They care about dividends, how to grow their wealth, capital appreciation. They only take profits when necessary. They keep on reinvesting their dividends, just grow their portfolio. To a point where this portfolio itself, the dividends, are enough to give you good capital gains. They are to give you enough money without you selling. And when you sell, remember their capital gains. Again, prices have moved up. They work like the way pension works, where you are just putting your money into a pension scheme or plan. Money keeps on there. Interest keeps on being loaded back without withdrawing. At one point, you realize even if you stop contributing, that interest alone can grow your own pension. But remember, immediately you stop, maybe the scheme provider may decide to penalize you. Now, in shares, it is different. When you buy shares and you keep on reinvesting your dividend and also capital gains for short-term trading, at one point you find the dividends flowing into your bank are enough to pay your bills. Do you even need to invest again if you're in retirement? So you just be watching the market. That time when you get dividend, that's when you're going even to show the traders in brokerage how to trade. You start giving them tips. That's what happens in the market. Those people who invested a long time ago in their retirement, they're the ones who come and challenge us. With just a dividend, and you are like, is this dividend or a salary? Because if it is even more than your own salary. Just by keeping small investment, compounding the investing without selling. Then this dividend at one point now is way huge that they no longer think about capital gains. To them, even if market drops, they no longer worry. Because the dividends alone are taking care of them. They only take profits when they want. And remember, these are people who look at generational wealth. They will pass these shares to their children. But remember, dividends have taken care of them during that period, including even paying bills. Remember, at old age, that's where you even need to visit a doctor frequently because of the way we are living these days. So you find it is these dividends which are supporting you. Then you pass that wealth to children. They continue taking those dividends. You have shown them how to invest. Remember, they also continue rebuilding the wealth you have given them. Then there is the long-term trader who just buys. He looks for opportunities, buy without selling. Then when he spots an overvalued stock, he sells. Takes profit quickly, looks for another one without withdrawing, buys that. Remember, he's compounding using capital gains, the profit he's making after sale. He's using it to buy more shares. At one point, you even get tired now of trading. He transforms himself into a wealth builder. After he has built a good, strong portfolio, and NSE, there are few stocks which don't give dividend. So for them, most likely, even that time, you are focusing on dividend stocks without knowing. You start receiving dividend. A dividend of 500,000 hits your bank account. Would you even sell that share? No matter the profit, would you sell? Then there is a short-term trader. You spot green in your portfolio, you want to sell. You spot red in your portfolio, you panic. And that's why you find most people all over in social media looking, why is this company prices falling down? You panic. You want to look at every other news because we have conditioned ourselves such that you want to see profit in your account daily. Remember, as a trader, profit is not guaranteed. You have to be very smart. You have to accept one fact. Even if you are a day trader, the main purpose of you at NSE is long-term trading. Because short-term trading may not work that easily. There are stocks, any share that moves with a price of 2 shillings and below, that one, forget about intraday trading. Unless you're investing very huge sum of money. It is dictated by the number of shares. If you're looking to make 20,000 in the market for a share that is moving with 2 shillings, then you must have 10,000 shares. You only need to multiply that with the price, you see how much you need to invest. What if it's a share that is giving you 50 shillings? You only need 1,000. You have 50,000, but again, multiply that with the price. So as a short-term trader, capital investment is high. Otherwise, you have to keep on repeating the cycle. Buy small units, get profit quickly, use the same profit plus your capital to buy more share of that. Play around with the price until capital is enough to play. So as a short-term trader, investment must be there. And you have to be awake to one factor, that prices can go either way. As a long-term trader, the same thing. Prices can go either way. Then you might find maybe, let me take a good example, B18. Because that has caused some jitters in the market for the last few months. It goes to 590, 580, you buy. The next day it is falling, you panic. Instead of doing DCA by buying now at a lower price, you want to sell now what you bought at 580, you sell at 540. You are losing because of commission either way. It's better you hold on that share, forget about it, take your dividend. Price drops are temporary in some of these stocks. Like BAT, I'll tell you, people panicked when there was announcement of change in the management and the board. But which company doesn't change board and management? Even where I work, one day we woke up, board was completely changed. Management at the top was complete, but she didn't stop its operation. Nothing, profitability didn't change. It's the same thing even with these companies. But we panic, we we all want to go and sell. Then those who had the power to buy, they withhold their buy. You go to another stock. Price must go down because of oversupply. And remember, foreign investors, as I said, they don't come very early in the morning. They don't come that window of 9:30 to 11. You see few foreigners. And if you see a foreigner that time, is a foreigner Kenyan. A foreigner will come at 11. When chaos are wedded, market have stabilized, they can lead your direction. If they lead panic, they put lower prices. If they need confidence, they put high prices, they don't miss the opportunity. So when you are doing day trading, as a day trader, you need first of all to have your own small watch list. Don't put everything. As I've said, shares trading a gap of 2 shillings, it will take you time. But a share that is doing 4 shillings, 5, 10, 20, 50, 100, have it in your watch list. Don't have too many shares. Remember, as a trader, you want quick glance, see the prices, take opportunity, hit the price before you are left by the train. Then when you buy, you want immediate sale. That's where now intraday trading comes in. Then as a long-term wealth builder and also long-term trader, you may have another watch list, which is based on your long-term goals, what you're looking for. There are those people who look for prices. You want to buy low, then you sell when prices go up. You're not in a hurry. So you just put those opportunistic stocks like ABSA, just put it there. And when you buy stocks, don't panic too quickly. A month, 2, 3, don't expect that huge price movement. If you're expecting that at NSE, I would tell you buy Uchumi, buy KQ, buy Frametree, buy Kenyari, but a stock that you not be able to sell easily, or you may never be able to sell. You might even sell at a loss. Uchumi only needs tomorrow. You wake up and everybody in social media is hyping. You see the price running up. Then it becomes a point where now you all panic. Because these prices have gone way too high. You're even doubting yourself. You all want to sell. You are going broke, demand back to where it was, below where it was, to a place where you can't sell. And remember, some of these stocks, they are in lead. Color red, like the one you can see at the bottom. 8CM. One of them is Uchumi. It's a loss-making entity. Let's not be right with a short-term profit. That happened because of China Square. But who is renting that? It's just one foreign, actually, a Chinese company. What if they decide to go tomorrow? Anything can happen. Like now, it's flooding. How many people can access that if the drainage there is not okay? It means even the person who have rented that will have to move elsewhere with his tenants or with his business. Then the next thing, Uchumi is at a loss. They opened branches because that was during festive season, Christmas. What is happening now? January to date. They still have expenses. Again, we'll be hyped during Easter, but Easter is how many days? Just 2, Sunday and Monday. Friday, remember, Catholics, we are not around. I think most of the Christians. Saturday, that's when you want to rest. Sunday, you want to go to church. You don't have time for shopping. So you do shopping on Easter Monday. But how many of you go to Uchumi? Like me, would I move from where I am to go all the way how many kilometers? I think 20 or even more than 20 to Gong Road to buy in Uchumi, where I can just walk even here outside and I have a kiosk there where I take everything that is in that Uchumi. So basically, when you see some of these news, take them with a lot of care if you're investing at NSE. Because as a long-term trader, you don't want a stock that holds your cash. A stock that can be switched tomorrow off during trading hours. The time you're submitting the sale order, the system tells you the instrument suspended. You're trying to struggle, you go to social media, you blame the broker, only to find information on CMA website suspended for trading. Ask those who have MEAs, Century, they have held on those shares for the longest. And there is nothing they can do, even if you go to the court. Yes, even if you go to the court, CMA rules are the final. You'll only be asked one question. Didn't you see CMA announcement? Unfortunately, these days, there are people like me who are training. They can even use that video as an example. They tell you, see, you're even told. So when you get into some of these stocks, don't hold down to them. That's why you need that watch list for your long-term trading strategy. Such that if a stock is in a profit, it is you now to go to your portfolio and decide, do I want to take profit or not? If you want to track some of those stocks and see whether there are opportunities, you just create a small watch list where you can scan quickly. If that stock is not of your interest, you remove it. You add another one or you stay with the rest. If you are buying based on cycles, and actually this is what I would recommend. We have so many cycles in NSE. Like now we have 3 cycles. We have IPO cycle, KPC IPO. It has not ended. KPC, remember, it will take some time, like a month, before we forget about it. And remember, KPC will also affect Kengen and KPOC. They are in the same sector. Already it has started affecting KPOC. You can see prices going in a direction up and down. Kengen, it's because of government influence, but didn't they have AGM last month, if not this month, to restructure that board? Once it is approved by CMA, in the board of Kengen now you have independent board, the board members, one representing the public, one representing the institution, and another representing the government, which means what? There is less government interference. So for those who have been saying there is no price control, this is one of stock we should be running from. It is a good stock that we can learn how government controls the prices. Once that is structured, prices will start moving freeway. But until that happens, Kengen will still be under 9, under 10. But that's a stock now you want to add into your long-term watch list, so that when announcement is made, a small announcement, you are quickly going to that watch list. You just see Kengen, see the spike, and you decide whether you want to enter or not. Companies are about to announce the results. Now, with the full watch list, like you will see, you won't be able to tell where Cooperative is. You won't be able to tell where Stan Chart is, where Safaricom is, where another stock is. So you just be flipping your stock, your watch list up and down. And remember, as you are, with the colors, the way the colors work, if it's green, green, red, green, green, red, 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 when you are flipping, it looks like now they all turn red. You even panic, you get tired. But if you have like 5 or 10 stocks, you only need to look quickly, see how they are performing, go back to your main watch list. News, companies that are being having maybe news in waiting, like Safaricom, should be on its own watch list, somewhere you can quickly see how it's trading. You can even click and see watch list, its market depth quickly without having to flip through. So I'll show you how to create some of those watch lists. It is you to be creative enough to see how you can play around with those. There are usually 3. I can check on the online portal. I think it may allow creating extra. I'm not sure about the app, but we'll see. If you can create as many based on what you are looking, you have a very easy time at NSE. So a stock that is announcing something soon, if it is in that watch list, it gives you an opportunity to quickly scan and know whether you want to buy or sell. And these are the watch lists that now helps you identify easy entry points and exit for those who are taking profits. Then you must have another watch list, a must have portfolio watch list. What you have in your portfolio valuation, have it in a separate watch list. Instead of every time going to your portfolio valuation where now you see a small profit, you panic, you want to take it. A small loss, you panic, you don't even want to buy. Instead of doing all that, have them added on our separate watch list. Your work is just check which has a red, maybe 2. You decide the amount that I have, so you can add on 2 of them. You come and buy without having to go to your watch list. Which is in green, then you make a decision. Do I still want to hold or? Then if that green, because you can always remember your average price, if there's a big difference, now that time you can quickly rush to your portfolio valuation, check that stock, don't look the others, just that stock, profit, you make decision quickly to sell, you come and sell. Why am I saying don't look at the others? You find another one is in red, or all of them, or the others they are in red. Now you panic, you don't want to buy shares, and this market can move either way. So for portfolio watch list, 1, it will help you track your stocks you already own with a very peace of mind without even worrying. It helps you monitor your performance in the market for your portfolio, which stocks are even performing well. That time you even have courage to go and see news, what is happening. But if you are just going to portfolio valuation, then everything is in red. Actually, the total balance is negative instead of a profit is a loss. Any news to you now becomes negative news. While you can just have like a small watch list, which gives you peace of mind. Your portfolio valuation, you're only looking when you really need to see the actual profits. And it also helps you in long-term portfolio management. These are not just the watch list you can create. There are so many. There are those who have been speculating with Uchumi, KQ, Frame Tree, Kenyari. You can have your own speculative watch list. When you want to be shocked by the market, that's where you go. You know, most of the investors, we have 2 investors in NSE, those who are coming in the market and those who want to be shocked by the market. So if you want to be shocked by the market, go and create them there. You don't even need to ask anyone when to buy or sell. Those are stocks you don't even need to ask. Click buy, put any price, you get the share. But tell me, when will you sell? So you can create that small speculative watch list. That time you feel you want to be shocked by the market, quickly rush to it. But remember, when you come to the other watch list, you have lost hope in the market. Because you will see the arrows looking up. Quickly go and buy. Market continues. Try to sell. And I told you, for those who have Uchumi, KQ, Frame Tree, remember those shares don't give dividend. Kenyari at least gives dividend. And for those who have been panicking because of what is happening with rains, you should not be panicking with Kenyari. Kenyari is the insurer of the insurance companies. And government comes in. Government always have that fund to cater for such calamities. So insurance, and most people just show me how many have a comprehensive cover which covers for natural calamities. Very few. Hata ukileta wa makaratasi, you're always, when you're ticking, when they tell you your premiums will go up, you always wonder, will I ever be in floods at all? You just skip that and go to another one. So how many have covered their insurance covers such calamities? Very few. So basically what does that mean? Insurance companies, even if they will be affected, not that much. Meaning Kenya Re will still be maybe in a profitable position. They can still give their small dividend. But now uchumi framed KQ. We are just living on hopes. KQ body restructuring, then there is somebody who is coming to restructure the whole airlines, all that story. Already we have war in Middle East, which we don't know it will go for how long. So even if they restructure, where does this KQ go? Unless it is US, Kina South Africa. But how many people are going there? Most Kenyans, we are in Middle East. Qatar and other countries around that area. So if those countries continue fighting KQ, we need to make profit. It is the same story we used to have with Mumias. Government comes and gives a good bailout. I remember at one point I bought around 30 something Mumias. Thinking because government have come in, it will go up. Why? That's when I learned the hard way. It went to 13. I had to make a choice. Take half profit, half loss, and move quickly. Decided to sell. It didn't go for long. It went to below 1 shilling. The next thing, bailed out. There were hopes. I didn't go back. The next thing, it was suspended. Nothing stops. Uchumi have been suspended before, even KQ. If you don't believe, go and Google. So when you're playing with some of these stocks, be very, very careful. Put the money you are ready to lose and you won't feel it. If I don't tell you this, you go and put any amount there. And for those who are joining, we are just in the introduction part for Watchlist. So that you first understand what you need to be in your watchlist and what should not be in your watchlist. Because the way the watchlist is, it has everything, even what you don't need. And a small price move on one, you want to concentrate on that, get in without even knowing what is happening, even without looking at the market depth. Because that can tell you whether you can easily buy. If a stock you are struggling to buy, it is the same thing will happen when you are selling. You will struggle to sell. And there is nothing bad like when you buy a stock, it goes all the way up. You have a very beautiful portfolio with profit. And you try to sell, you can't. And for those stocks, uchumi, the ones which keeps on fluctuating, blocking one side, if you are willing to sell, put the highest price around using GTD to sell. You just leave it and go and sleep. When that week ends, it has not sold, come back, put, even if it's going down, put the highest, you go and sleep. Let people keep on playing the prices. When you have opportunity of getting out, don't try to go back. A mistake is a mistake when you do it the second time, because that time now you'll be hit properly. There's one of my friend who reached out and they told me, you prevented us from buying when it was around, the last December when it was around 2, I've been told it will go to 4 bob. So I told him, if you want to buy, buy. It is your money. But put what you are ready to lose. What you are ready to lose. You told me I can't lose. He put in. He bought. Right now he's struggling to sell. At one point it goes even below his price. It is in a full negative. Like now it had gone to around 1.3. He's asking, what do I do? Already I told him, this is a stock you are playing with fire. When you are rocked, you are rocked. And when it stabilizes at a very low price than your entry price. The next thing you need to do now, buy more at 1.3 just to DCA downward. Just give him hope. But once you buy, put a very high GTD of 2 bob. And when you exit, don't go back. The way GTD works, because you have put it for several days, as I said, 9:30 to around 11, prices fluctuate because of market orders. 2:30 to 3, again fluctuation as people remove their orders, cancel their orders. That time he got an opportunity to exit. And from that time he never, even KQ, if you talk to him about KQ, he actually switches off the phone because he knows the struggle. And if you are lucky to sell, hey, go to a stable stock. Don't play with the market. Remember NSE, and I'll keep on saying this, even if they decide to disrupt these conversations, I will always tell you the truth. NSE reports data, they don't report your performance. So when they are saying the market is performing, just go to your portfolio and ask yourself, is my portfolio performing the same way? Why? If they are saying the market have gained, have you sold and made those gains? Otherwise, don't support their noise even on social media if you have shares. Unless you sell, there is no profit you are gaining. And that's why you find people who are in long term who don't sell their stocks, they are never affected. They don't even check it how when I see they are reporting. Them, they are only concerned on stocks they want to track and trade. And stocks which they have in their portfolio and they want to see how they are performing. So watch list, as I have said, it helps you track the stocks that you want, track the whole market, track your trading list for those who are traders, long-term opportunities, and also manage your portfolio without having to go to your portfolio valuation. I want us to first go to, let me see. Let's start with the app, because I think on the app there is much to see. Let me start with the app, because I think most of you, they are using that. Then we come to the portal. Allow me, let me go back. I'm just connecting my phone. A minute. We just go through how you add and remove stocks on your watch list. Then we go on the portal. The portal have a bit of more details. That's why I would want to start with what I can quickly cover. Just waiting for it. It has opened. I may need to connect my VPN. Let me connect my VPN. But you don't need VPN. Mine, there is a reason. But could also be the same reason some of you have not been able to access the app, where your ISP broke some of links. That is your internet service provider, but on the data it should work. Let me just connect a VPN, then I connect my phone, then I share screen. And as I said, if the broker you're trading with have a similar app, like AIB Digitrader, functionalities are the same. I think only AIB Digitrader, which is far ahead with account opening and introduction of other links. I call them links because those are not products. That is offshore funds. So let me share this screen so that I first show you, for those who have been getting error, I hope it will show that error again. Let me just close. So that at least when you get out of here, you know what to do. So I've shared my phone. If I click on AIB Digitrader and I try to log in, let me see. Just use a funny, let me see, OHF. I'm just using a fictitious account. That is not my account. If you're getting that error service unavailable, I did try after some time. Your internet service provider, Wi-Fi, or even data could have blocked your app. The next thing you want to use is either VPN to bypass your internet service provider, or you use another source of internet, which could be your own data. So I'm just reconnecting, and please don't call directly to my phone. I'm using it. Let me confirm I've not shared. I'm just logging in, then I share. So if you're getting service unavailable, it is your service, your internet service provider who have blocked a link for our online trading, because it goes through the same link. You may want to change your DNS. Hopefully I'm not using IT terminologies, but it's something you can change on your network. Oops, not that. DNS you can easily change on your phone and also on your laptop. Like now I'm connected, let me share screen. I'm using the same phone, I've not changed the phone. And you can see I've managed to log in. It's the first time I'm using this app today, so let me just skip that. Now what I was saying, let's start with the screen. You can see I'm already in a loss. If it is somebody like you, you'd panic. But if you got the portfolio valuation, you would notice it is APSA which I bought at around 32.20. It has dropped. But I bought at the same price. So the price have not moved. The 32.20 is because of commissions. Levies. That's why it looks like it is a loss. And it is not long ago, it was last week. So if it is somebody else now, they'll be panicking. My money is at a loss. Remember, I've not sold. I would only realize this loss if I sell. If you notice BAT 501 with a small profit, again bought during demo. This is a demo account. You can see it doesn't buy a lot of shares. So when you see that loss, don't never panic. Even if the arrow looks down, I know the reason. If you go to the watch list, you may find after there is a trade that went down. Now notice the difference. On the watch list, it is green. On the portfolio valuation, it is red. That's why I said, if you don't want to panic, don't go to portfolio valuation. Portfolio valuation only check when you want to see how your stocks are performing. Use watch list. Because why? APSA is going up. If I go to my portfolio valuation, I will panic and start selling. If I'm using this to track market, I will panic and start selling. But I'm selling a stock that is going up. It is at that one. It's actually green. So now we got to our purpose for today. So you got to watch list. You have 3 watch lists at the top. I believe so. Yeah, 3 of them. So if I wanted to rename, I would long press my hand on my watch list 1 and I would not release. It gives that menu. I would only need to delete the name. This I can call it main NSE. Then save changes. Didn't rename. So rename NSE main. Because now this will contain all NSE stocks that I want to track. I can create a space here. So I can click rename, and you can see it has changed. I already have for day trading. Then I can have another one, iron press. This one I can call my stocks or my portfolio. My portfolio, then rename, click rename. So I have my portfolio, day trading, and NSE main. NSE main, I can decide it is all stocks apart from the ones that I don't want to see. So again, I'll come and long press the name. It gives me that bucket. And I can start maybe scrolling down. I don't want that. I just click on the delete icon. I don't want to see Kimbo, even if it is my portfolio. Maybe I also don't want to see which other one. FTGH, KPOC 4, KPOC 7. Maybe the stocks that are not trading, but I'm interested in the rest. So I can come down. Maybe even Express Kenya, I don't want, then click save. That way, if I scroll down, some of the stocks are not there. You can see Cable is not there. Let's see if Express Kenya is there. It's not there. So I only have the stocks that I can quickly, but again, these are too many. But remember, I've called it NSE main. Because for me, I want to see the whole market. So if you don't want to see other stocks, again, the same thing. Wrong press, remove what you don't want, close. If you want to add back, you just click search and add script. Then you scroll. The ones which have a plus sign are the ones which are missing. Like let's say I want to add BOM and which other? Let me see if there is other. The others, they are suspended. The one which has a plus, most of them. Maybe KPOC 4, KPOC 7. And leave the others. Click add to watch list. It refreshes. Let's see. You see BAUM is there. It is returned. If you go to KPOC, it's added. So we go to day trading. I'll come to this because we need to add the stocks which are relevant, but let's clear it. I'll just go selecting, just select everything and click save. It will come there empty. If I want to add, we'll see how to add. I'll just click search and add script, start ticking whatever I need and click add to watch list. Under my portfolio, which shares are in my portfolio, you have ABSA, BAT, CIC, Cable, let's ignore it. So ABSA, BAT, so wrong press, remove these two, save. So I want to add, I'll come and click there, tick ABSA, then tick BAT, and CIC, click save, add to watch list. They mirror what I have in my portfolio. So instead of me going to portfolio every day and get that heart attack, I can always come to watch list. Where it comes to main, I just click on my portfolio. I'll see them. And you can see they're in green. But when you go to portfolio, all of them apart from BAT and red. And remember, when they're in red, I'm panicking. So I won't put more money. But if you go to watch list, what does it say? It says the opposite of my portfolio. It's telling me the market is going up. If I want to add, like CIC, that's the only time I would come to portfolio and see what price did I buy at? 685 minus the Revis. So it was around 650. 650 with the price it is currently around 510. I can do DCA easily by just coming here, tap on it. Right now this screen doesn't have prices. I can click buy and submit my order, maybe 100, because I already have 1 unit. I can DCA it with 5 shares very easily. Then I put the price I have seen in the previous screen. It's only that market is closed, but let's say 510 because it is the current one. GTD, put it 1 week up to Friday. Then I leave it as delivery because I don't want to sell. You come to intraday. For now, let's use what we have been used to. Click buy, get that breakdown and click confirm. That order will go tomorrow. Off market order placed. So if it executes 510, 510 commission is around, let's give it a benefit of doubt, even if it goes to 540, I can come and do my own DCA here. I have 685 plus around 11, because if you multiply 510 by 2 shares which I've bought, it's around 10. So that comes to, total comes to around 17, divided by the number of shares 13. So comes to around 5 what? 560, 550 there. You have seen I've rolled my CIC cost downward. I know nimewapoteza hapa na mahesabu. I'm not sure whether you have understood. So CIC, I have one share which I bought at 685. So the total cost is 685. Add the share that I have put. Actually it's 5 shares times 510. That's around 25.5. Add 685. Comes to what figure? I'm not good in mathematics. 25, 50 plus 685. So 10, around 14, around 34. 34 divided by 6 is around 550. You see, I've lowered my cost from 685 to 5 something. Then I will not remove that order because I want to see that magic tomorrow. This 685 going down. So I will only have a loss of around 50 cents. So that's how DCA works. Huh? Multiply the shares you have plus the shares you are buying, that is quantity times price. Add the total. Add now the total new number of shares, divide now the total cost by the new number of shares. Huh? You see your average cost. Oh, lost in the process. Okay. But you have seen how to create watch list. Huh? I want to go to Excel now. We do that mathematics quickly. So watch list, long press, change the name there, click rename, it will just rename. Huh? If you want to remove the stocks, go clearing, click on the stock, on the bucket, remove, click save changes. Huh? If you want to add, you just click on search or add script, search or add script, click the one which has a plus sign, click add to watch list, it will automatically appear. That's how easily you can make watch list. So for portfolio, I've shown you how to add. Just go to your portfolio, create a watch list for your portfolio, fill in the shares that are in your portfolio valuation. You only need to come here, write them down, the names, come to the watch list, click on search or add script, come and tick all of them, all the down, click add to watch list, and you have a portfolio that mirrors your portfolio. When you sell, again, come wrong press, remove it. That is when you remove it from your portfolio. If you add another stock, you come to search and add script, click on it, then add to watch list. Just that simple. And you don't need now to panic, because going to portfolio valuation, that portfolio can give you a heart attack. A loss of 1,000 in 1 week. But has the price has gone down? No, it is the same price. I bought it around 31.50, so I have not lost. The market is still within. And I think I bought it Wednesday. And if I want to add, I can add. But for ABSA, I can't add because I know it will be going up. Huh? There is a question, does this work on all apps in the broker? As long as you log into an app that looks like this. If your app looks like this, it is the same platform. It is the same developer. It is the same thing we are doing here. As long as your app looks like this, the 5 icons at the bottom, that can invest, whatever, menus are the same. When you click on the watch list, is the same. It is the same developer. Ideally, all brokers have the same platform. So whatever you're running here will work, apart from those who have gone outside the current developer, and they usually go and come back. Huh? So if your watch list, if your app looks like this, without offshore investment, because that's why I say the IB is a bit ahead. Huh? If you remove those offshore investment, the rest are the same. If they look the same, it's the same thing. Whatever I'm doing, you can do it. Huh? Let's quickly go to Excel, then we come to online portal. me just open Excel. So that you understand how DCA works. Huh? Then we go to online portal. I show you how we add. Then we go to the next slides. So I had one share at 685. 685. Let me zoom in. It's zooming. Let me zoom my Excel. Then I added 5 shares at 510, but because of commission, let's give it 540. So if I get the total of each, the shares I had earlier, times the price, then I also get the total cost for the shares I'm buying. It comes to 27. Then I only need to get the total number of shares. Then also get the total cost here. I hope now you understand. Number of shares, this is number of shares. This is price. This is total cost, key costs. So we already have our total here at the bottom. 6 shares with a new total cost of that 385. What is the average? You only need to divide this total cost by 6, the total number of shares. That will be my average. I've moved from 685 to 560. So the only difference ni kidogo sana with the current price. I only need to do another DCA, reduce it to around 530 or something. Any price movement now above this, I'm in a profit position. I hope now you understand how DCA works. I hope now it was Omondi, now you understand how it works. So the number of shares you currently have and its price that you already have in portfolio valuation. Then the new number of shares you are buying and the current price, then you factor commission kidogo. Get the total of each. That is the number of shares times price. Get the total down here. Let me even broaden this. Get the total cost and the total number of shares. So the average price will then be your total cost here divided by the new number of shares, which comes to around 5.6. So my portfolio stops being 685. I stop seeing that reddish thing, and I know the next time this share goes above 5.6, I'm in a profit, and I can offload maybe at a profit if I factor the cost of sale. I hope now we are clear on that. So if this share goes to around 6 bob, I've already made some gains I can even sell. So that's how DCA works. You try to buy at a lower price, more number of shares. You try to buy a lot of shares. When the price goes down, buy a lot of shares. That way you move your cost down. If the market is going up, buy few number of shares so that you don't move your costs up. Because I know somebody will ask me, what if the share is going up? That time, like now, the people who bought equity at around 30s, I know you don't want to add shares because you don't want to touch your average cost. But what if you buy a small number of shares? You just move your average costs up a bit. Remember, this is a share that has a possibility of even going to 100. Let me not pronounce myself because I'll be quoted. But with the way things are going, anything can happen in this market. Nothing stops equity from going above 100. DTB was at what price some time back? And the beauty with Equity Bank, I've said this, they have done a split before. I don't see anything that stops them from doing another split. Even if those share goes to hand in hand with KCB, and I think that's why maybe they would not want to do a split. If any one of them does a split, the other will also do a split. Remember, the number of shares still go up, price goes down. When price improves, then you're in profit position. Let me explain that part. Let's take equity. You have 1,000 shares at current price of 80. Equity decides to do a split of 4-1. So what that means, we have our factor here 4. It means the number of shares here, they are multiplied by 4. Oh, sorry, let me undo. This is multiplied by 4. So your new number of shares become that. But remember, if the price retains the way it is, your valuation goes up. Well, the current valuation is this times this. Your valuation should not change. So what do? The price goes down with the same ratio of 4. If you multiply these now and the number of shares, your valuation doesn't change. Notice these two. Let's remove that. So your shares go up, but price goes down. What happens when equity goes back to the same price of 80 times? Let's even give it 40, not even 50, not even 80. 40 times the new number of shares. You have your 60,000. You have already made double just by holding on those shares. What am I trying to say? Even if equity goes up, don't be tempted to sell unless prices are unjustifiable. If it goes to 200, then that time you need to make a decision. So I think you have seen how share split work. I introduced it earlier because that's what you start seeing in the market at some point. Either share split or bonuses where the price goes down. As an investor, don't even panic. Those are free shares you'll be given at a bonus. At a split, even if it's not a bonus shares, when price moves up, remember you go back to profitability. So let me share online portal. We got Watchlists. Because I would want us to understand this, the Watchlist thing. Then we come to intraday trading. Without that, you won't be able to do intraday. Now, on the main Watchlist, this is the main dashboard. If I click there, you can see it is the one which is default. It is the one that loads. Let me remove this. To delete, you just click on the name on the top, default dashboard. Click on the delete icon. Delete. It removes that watchlist, but don't remove the default one. Never be tempted to remove the default one. Default one unless you want to remove the shares. Because that's what is coded in the database. So like here, if I wanted to remove shares, now on the main watch list, I can just come, maybe I want to remove cable. There is this column with delete buckets. So like cable, I can just come straight to where it is, click on that, click on yes. It is automatically removed. And if I go to the app, it won't be there. So whatever you do on the portal affects also affect also the app. So let me also remove Express. So I can leave those there. So this one I can leave it as default. Then I can come. If I wanted to create a new one, I can click on the plus sign. So to click one, you just hover to the head. I hope you can see I'm hovering where there is default dashboard and arrows. When I go to the black section, there is these two. Where you can edit the dashboard. Like if I wanted to adjust this to main, I can call it main NSE. Remember, these won't reflect on the app, the name. So this is for the portal, and I save it. So instead of default, I have main NSE where I have all the shares. If I want to add, I will only need to hover to the head, click on the plus sign. Here I can call this maybe day trader. I'm a trader. Let me call it trader. Then save. You can add description. You see it is empty. When it comes as empty, you can always add now widgets. Where there is plus sign, you come and select watch list, market depth. You want sector statistics, market. You may also want, you don't need portfolio because portfolio is already, remember you don't want to keep on seeing your shares. As a trader, you also want market news, market trades, chart. You don't want portfolio valuation because you will panic. You don't want order status. Today positions because you want to see your today positions and today trade. You save. They added automatically and you can arrange them. Like I always prefer this to be on the left of the chart of the watch list. This to be at the bottom. Then this here. So you have your watch list organized. Then you can add stocks using plus script. Now as a day trader, we'll come to that. If I want to add for portfolio again, hover trader, and I create this portfolio or my portfolio. Something I can easily know what it is. Again, it comes as empty. This one I would only need portfolio valuation first. I would also want order status. For this, I may not need a lot. Then watch list, market depth, and maybe even sector statistics to see sector wise. However, you can also chart because you may want to trade. And you have everything loaded. Now here I can add my stocks. Click on plus script. Then I can add APSA. I had also CIC. You just type the name and you click to add, then BAT. After I've added the three, I click add. And I have my list of stocks. If I scroll down on portfolio valuation, I click show details. They are there. So it is very easy for me now to navigate between the screens. Between my portfolio and also my orders, sector statistics to just see how the stocks I have, the sectors they are in, how are they performing. Like I have APSA, it's at the bank stocks. I can always tell if there is more interest from foreigners, I can decide to add more banks. If it is manufacturing, I can come because I have BAT, CIC at the insurance, then you can easily track. So with that, let's go back to the presentation because now we have seen how to create watch lists. Let me first close some of these things. We'll come to them. I'm just closing as I share my screen. And if you have any question now, you put on the chat. I think this one now it becomes interesting because now we are going into trading. Hopefully, let me see time. We still have a lot of time, so and I hope hamtachoka sana because our draft kama we won't manage to finish, we extend. Because I would love to answer all your questions as much as I can. So we have seen how to create watch list, how to add stocks on portfolio watch list, and main watch list to clean it up. What we don't have is our trader watch list and also my watch list. Why? There are stocks that you would want to view in the market. Those ones you want to have a separate watch list. A trader watch list is the stocks that you want to actively trade on. Hopefully the app, we'll see whether the app, if the app only allows 3, then you can make a decision even not to have the one for portfolio. For the portfolio, you can add it with the stocks that you want to track to. The ones which are not in your portfolio but you don't want to track. As I said, all these are there for you to innovate. And just show me any broker who have ever told you what is the purpose of all those watch lists. I think in EIB Access I was the one training, but because of one reason, 2, 3, I pulled out. I decided to train outside. Because again, you don't want to train people. And sorry if I'm telling you some of these things. You don't want to train people on what have been dictated. Because why would I hide some things? Like now, if I don't tell you what is happening to Safaricom, APSA, you'll be buying Braidry based on our research, which doesn't tell you what is happening. The actual reason why those prices are not moving and why some are moving. Kengen, I have seen so many people asking the question. I hope I answered. For those who came late, Kenyan, the reason why it doesn't move is because of still government control on the prices. Government, the board of Kenyan, it's composed by government representatives. It doesn't have representatives outside government. Let me first share. I will forget my YouTube channel because that's where I'll be sharing these videos. The link is there. Let me just paste. So that is the YouTube channel. I'll be sharing all the recordings and also even notes. They're usually on each video. There is a link to my blog where you can find these notes in PDF free of charge. All the materials and also videos. They have not put any videos behind the wall at all. And I don't intend to put any notes. They are free of charge. You just download PDF. And also recorded videos, which maybe I do outside the live trainings. So as I was saying, Kenyan, the board composition is mostly appointed by the government. In the previous AGM, they said they want to have an independent board. That is 2 members from the government, 2 from the public, and the others from the institutions. What does that mean? Government may no longer have control over prices and anything that is announced by Kenyan. Opening now the price for Kenyan to start moving. I hope now when you start seeing Kenyan moving now, you already know. Kenyan, KPOC, KPC are in the same sector. There is no way KPC can list at 9 and start to go up maybe. KPOC is already running up and Kenyan is always left behind. They have to make sure Kenyan first goes. Then the next time maybe KPC. If there are no politics, it might drop briefly, then follow the journey. Didinyoro said what I usually say. This market, if you're not careful, it is controlled. So I believe now you know how to create watch list, put the stocks that you want to watch. Like now you should be having Safaricom somewhere, APSA, Kenyan, WTK, Capchoro, sitting there. APSA Gold. Those are stocks to watch. Not for speculative trading only, but also long term. Because prices will move. But then that does not mean you sell. Only APSA Gold. That's the only one I can tell you take profit quickly. So why are watch lists critical? We have seen when you create, they help you quickly identify trading stocks. Like now, if you filter out the noise in the watch list, you remove the stocks which are not trading, you're left with a clean stock list. We have seen if you go to portfolio valuation, you might easily panic. But when you go to watch list, it gives you that confidence to continue trading. Only watch your portfolio once in a while, because your shares go nowhere. Number of shares doesn't change, it's only the price. So why would you struggle to create panic where you can create that small watch list, which doesn't give you that suspense in the market? Because the next thing you do, you think you're in a loss, sell. NSE is not like Forex. NSE is like international stocks, physical stocks, or ETFs, but limited by 10%. There is nowhere your share price can go. It can't go below 10%. Also, it helps you identify volume spikes. The volumes that trade at NSE, they are very, very important because those are the ones that determine whether the market is moving or not. Some of the stocks that you see there that are stable, volume doesn't move at all. Like ABSA, when that announcement was made, just one huge trade moved the market. And that price have never gone below, back to where it was. Around 28 is there. It just spiked before shading quickly and stabilized around that one. Also helps you identify price breakouts. Price breakouts, it's like the same thing that happened with ABSA, where price just at one point you just wake up and price shoots. You're in the middle of trading. You can see just share trading 99, then the next thing it is at 11. Because if you're able to identify some of these things, then you can always tell the opportunities. And opportunities doesn't come when price moves up. It comes when price goes down. Or when an announcement, because you can see news on the portal, not the notifications. On the portal, maybe you can also remind me on the chat, I show you where the news are. So that if there is a spike that day in one share, you need to go to news and see what have been announced. You don't even need to Google these days. You can see that in the news. On the portal, online portal, not on the app. Just remind me on the chat when I get back to either Q&A, I can show you if I remember when I'm coming back to it. But maybe the things I want to explain might carry me away, I forget. It also helps you manage multiple trading strategies simultaneously. Why? You want to do day trading at the same time you want to invest. If you don't have those watch lists, my friend, you will mix yourself. You will not even know what you bought intraday. You will not even know what you are buying for long term. And within that confusion, you find you have lost an opportunity. But now when you have a trader's watch list and a long-term watch list, you already know what you are tracking. If you have already placed the order for long term, you are only now concentrating on the main watch list. That is not the main watch list, the intraday traders watch list. And you're only tracking those shares. If you get price alert or push notification that the trade have executed, you only need to do a counter trade quickly because you can see the orders which you have placed. If you bought, you can sell the same day with intraday GTD. I'll show you why I'm saying intraday GTD. From now, I think we move from what we were doing earlier, delivery GTD to intraday GTD, irrespective. Because opportunities comes once in a lifetime. You may be holding on to a share. Announcement is maybe BAT. Announcement comes, it hits 1,000. And maybe it's only for that 2 hours. What if you had bought in delivery? You won't be able to sell back. What if it is intraday and you have bought? You can come and sell immediately. You take your profit, then wait the following day. That's a new strategy I want us to adapt. Advanced trading. Even if you are new, it's very simple. It's only that, as I have said, and I see there is so much to learn. I think this is day 18? And I've not completed those videos. I don't even know when I'll complete. I'll show you I've even made the decision to even extend the training days and also times, so that we cover as much as we can, so that this year it is you now to make decisions wisely. And remember, these are all free trainings. So also they help you reduce risks of missing opportunities in fast moving markets. Why? Let's take up a gold. There is somebody who sold and bought, another one bought at 3,500 when the gold have been trading above 5,000. I'm talking about the last 5 months, 3 months. Where it has been trading around 5,000, 6,000, there's somebody who sold at 3,500 and another one bought at that. That was a missed opportunity in the market, because I know it's somebody who made a mistake of selling at market, and a smart one put a GTD to buy at the lowest price. It will hit either way. So if you have such watch list where you are tracking gold at the intraday and you realize somebody have hit a lower price, you can easily even you put a buy order at the same price. You might get it before somebody realizes their mistake. Then it supports decision making for intraday and delivery trades. Because for intraday, you know how to make decisions. For delivery is where you are buying today, it settles T plus 3. Those are long-term trading or long-term wealth building, depending on your strategy. You could be buying to sell later at a high price. That is long-term trading. Or wealth building where you are just buying for dividends. Nothing stops you from playing all those fields. It's only you as the investor and your time. And you don't need time. The app makes it easier for you, even online portal. It has notifications and alerts. So what you need to track as a day trader, first of all, it's top gainers and losers. You want to buy in the losers, and the top gainers, if it is part of what you have bought, you can sell. So you also want to identify the momentum stocks, the ones which rose with a very huge margin. Day trading, as I said, cannot work with a share that is moving with 2 shillings below 0.1 cents, unless you have a lot of shares. For day trading, you need a stock that is moving in price, that you can even buy 2 or 10 shares comfortably, and they give you some good amount. If you're trading with Akina Absa Co-op at the intraday, you need over 10,000 shares to play intraday. 1,000, that, and if it moves, maybe 1,000, if it moves with, but then 1,000 times 31, that is 31,000. BAT, you only need even 10 shares. It moves with a price of 60. You have a year 600, but then that's around, if you multiply, that's around 5,000. That's the mathematics you do. Because for the small price movement, you need a lot of shares. For big movements, you need few shares. It all depends on the gains you are looking for. Then also for volume leaders, so that you can see where there is active trading. Higher liquidity, because you want also a share that you can easily buy and sell. And there is less spillage. Spillage is where prices starts to clear from top downward on the order book or market depth. Where the price was, let's say 31.80, then there is 32, 33, 34. Then you realize in a minute all those prices have cleared. You don't want to be in such a stock, because it tells you there is somebody who is playing with market orders, which are very risky, but also opportunity for you. So when you're creating your watch list, like now for day trading, you may want to focus on high volatile stocks that move with the price. Price can move with a very huge price difference, and maybe even high volumes. Because if you are targeting the raw ones, if you are targeting the raw stocks that moves with 2 shilling, 1 shilling or lower, those ones you need high volumes. A share that can do 1 million shares in a day, or even in a short span. Volatility, it is in terms of price that it can move even with 20, 30, 40. Those are the stocks you want to have and also focus. Also do pre-market analysis. This is something we forget. This helps you identify momentum potential. You see the window between 9 and 9:30. That's when orders are being placed. Even if prices are jumbled up, I wish I took a screenshot to explain this. Where you find prices are mixed. You find there is a price on bid side that is higher than the supply side, and on supply side there is a price that is even lower than the demand. That can you can easily spot the direction and also opportunities, because the market, when it opens, all these prices outside the range will just create the best, but that can tell you the direction the market can take. Then cycle-based stocks. You may want to keep on adding and removing stocks based on cycles. Like now we are going to announce results announcement this month and dividends. You want to have a watch list that have those stocks, so that come when they are announcing, you can spot easily the market, how it's performing. Also based on performance in the market. Like let's say stocks are just running up. You want to see them in one stock, in one list. But for speculators, that's where now you add akina uchumi. For the rest, if you are not interested, just knock it off. Also, when there are news, like now we already have Safaricom. Simuliambiwa by the end of this month, we will have known the deal. And that on 1st April, it is the deal will be completed. Parliament have given go ahead. Even if they said they want more answers, it only takes 2 days. They already have the answers. They are only taking us for a ride, so that we stop answering asking the questions. By the end of this month, the deal is approved by the regulator, and it will be approved and immediately given go ahead by the government. That is the sad news. So for those who are waiting for Safaricom to go down, already people have started to take opportunities downward. I'm not sure how they are getting this information. You can already see orders coming up at a price of 30.50 around there. That tells you that price may not go down. If this week it opens with the same behavior, just pick the current price or just slightly lower price and wait. Most investors were waiting for Parliament because it is the one which was supposed to go ahead, and also COMESA. Remember, COMESA doesn't have government interference. CMA is part of the government. Competition Authority, part of the government. And it is one now we are waiting until they approve. Parliament is already on the government side. So who else can stop? Nobody else can stop this deal. What we are saying is, 1st of April, it will be announced in the morning, 9:15, it is signed off. The next moment, funds are just moving, and price is opened up. What does that mean? NSSF removes the block trade at the top. After that, it is you who will be chasing now the prices. We come to upside, the same thing. News are already there. It is added in MSCI Frontier Index. We are still waiting to see whether it will go up. You have seen on the portal, it looks like it's going down. I told you, NSE, they report average and also closing price. It might be lower than the price that executed that day. The next thing, you'll be chasing prices. So when you see news, these are stocks now you want to have their own watch list. Keep on watching what happens each day. Then you keep on updating this, especially the one for trading and for long-term investment. You keep on adjusting based on volumes and price action and news. You just want to see what is valuable to you, is what is on those watch lists. If you want to see the others, they are on the main watch list. Stocks which are inactive, just remove them. Add new potential movers. With that, now you are ready for day trading. But now there is a difference between trading and investing. And I know most of us, we do all of them together. We don't even know which one we are doing. Today you are buying and selling, the following day you are waiting for dividend. Then after that you are buying and selling. Eventually you realize you have lost the gains you are looking for. Because we mix trading from investing. Those two are totally different. In terms of time frame, trading is where you can trade any minute, any hour, any day. You buy and sell, weekly taking profits. Long term is where you wait for months or years without selling. You're either making profits or within those years you are taking dividends. The objective of you trading is profit from price movement. Capital gains, purely capital gains. Investing is where you are creating wealth through compounding. That is reinvesting dividend. When you sell capital gains, instead of withdrawing, you will invest capital plus profit back to grow again. Here you are targeting dividends and also long-term growth by reinvesting your profits. When you sell, you don't withdraw, you buy even more shares at a lower price. And don't do what is happening in the industry where you sell today because a recommendation is there to sell, then a recommendation to buy comes when the prices is high. Remember, this costs. As I said, for a sale, go to your portfolio valuation. If you're ready to take those profits, take. If the share goes down, that time buy. Let nobody tell you when to sell. Even Peter should not tell you. For those who have reached out, I always tell you, look at your portfolio valuation. Are you ready to take this profit? But remember, that price may be going up. So when you sell, don't come back and ask me, do I buy back? Because that time price may have even gone above the price you sold at. Because that is the mistake most of investors they are doing. You buy, yes, price goes up, you sell because you have been told, it goes up, buy back. Sometimes I ask myself, why did somebody tell you to sell at a lower price and tell you to buy at a higher price? Some mathematics have a question mark. Huh? I don't want to disclose what people use for research because you have it. Tuone kama kuna mtu hapa ya bin sikuwe na chama bets. For those who are asking whether it will be shared, I will share. Actually, we have not gone far. I'm still, hata sijaanza day trading. We are coming to it. So as I was saying, this industry, I don't want to assume people are using ChatGPT for research. It would be the worst thing. You just put uchumi to ChatGPT, ask it, if I was to buy uchumi, would you recommend me to buy? And you just give it clear instructions. This share price is going up. People are buying. Where are you? You know it. People are not buying. People are buying. Just give me recommendation. Can I buy? You see what it will give you. Because it will give each and every person their own recommendation. You find it telling somebody to buy, but are you able to sell? So unfortunately, people could be using that just to make work easy. So when you see contradicting, because there is a client who reached out and I felt touched. They bought at a lower price. They were told to sell because they followed that recommendation. They sold. The same share you are being told now to buy when it is at a higher price. The client was asking me, how do you recommend a buy? Then you recommend a sell. When price goes up, you're recommending a buy again. How is that even mathematics possible? I felt like it is me who had given that recommendation. Only that it's a different department. So when you're making objectives, be clear. What do you want? If it is capital gains, take it as and when you want. If it is wealth creation, then you need to be patient. In terms of analysis trading, this is where you use charts, graphs. Don't use candlesticks. NSE, don't try to use candlesticks. I know it is there on the app. And I want to request the developer to remove that because it is misleading. NSE, you won't see those things in Forex. It requires a straight line graph that you can see. That's what you need. You also need to identify patterns. You can identify patterns through the same graph. Momentum, you have watch list and also executions. In terms of investing, you need company performance in terms of how is this company performing, how is the operations, expansions and such things. Valuations, though valuations these days because of accounting adjustments, it has distorted everything. Then the earnings, profits, dividends, how much are they giving? If they're not giving, if they retain profits, where do they go? Are they reinvesting or are they paying debts? Then in terms of risk, trading have the highest risk. Market is volatile. It can move anytime. Trading, remember, you actually putting that sale order. So if market moves against you and you had put a lower price, or you sell, then price goes up. In terms of investing, it is moderate because you have not disclosed the time that you sell. And those lengthy period of holding those shares absorbs that volatility because you only sell as and when you need your money or when the profits are way too high. In terms of capital, trading, put what you are ready to lose. First of all, what you are ready to lose. And I will always repeat that, what you are ready to lose. Remember, you're putting a buy order. At one point, you put a sell order. What if market moves against you and you make a mistake? You put a say, without you forget to change the price. So for trading, you need to be very, very careful. Put small amount that you know can give you substantial gains. Don't try to be greedy because market can move against you. It's better you split that amount into two. One you put into investing, where you put a lot of money with long-term commitment. Why? Day trading requires you actively monitor. If you're looking to day trade when a soko 9:30 to 3, you'll be together. And also fast decision making so that you don't have to ask Peter, do I sell right now? No. You are in a profit, hit the order. Investing, you have more passive, even enough time, even to consult others, consult the industry, consult news. But for trading, you're only studying between yourself and the system. Am I sharing? Oh, okay. So before we get now to actual trading part, let's understand just a brief of what happens, because this is where you make mistake. Trading hours, 9:30 to 3 p.m. active trading. That's where now shares change hands and money. We have pre-market session between 9 and 9:30. It's called pre-open. That time you're just submitting orders. For those who trade in international market have come across this term, pre-market trading. But in NSE, it's not trading. It's pre-market session. Pre-open 9 to 9:30, where you just submit your orders with a price. Then from 3 p.m. to the next working day, 9 a.m., market is closed. But broker platforms allows you to place off-market orders. So a minute, I take a cup of water. So I hope now you understand the trading cycle. So as a day trader, you only have 9:30 to 3. The rest of the time is to watch and analyze. For long-term trader, you can place your order anytime. As a day trader, 9:30 to 3 p.m. However, Since you're trading with the GTD, you can still place your order between 9 and 9:30, but identify the price mismatch. As I said, 9 to 9:30, you find prices mixed up. It is normal because you're just placing the orders the way they are. 9:30, that's when the market identifies and stabilizes the prices. Then from there, market orders clear. There will be some noise up and down. 11 to around 2:30, market is quiet and stable. You can even tell whether the share is going up or down. That's the time you see even news pushing the prices up. But now at around 2:30 to 3, market cools down. There is no after hours trading in NSE. Like international markets, there is after market trading and pre-market trading. NSE we don't have. In international markets, there at that time, yes, few shares, institutional traders, they actually trade on themselves. It's not the active trading. Then in terms of order settlement, once you understand the market hours, we come to order settlement. NSE uses T+3 settlement cycle. The shares that you buy at the delivery mode, because there is delivery mode, when you're placing order, they will be credited in your CDSC the same day when you buy, but they are not available for selling until T+3 business days later. That is delivery. That is the normal settlement. If you buy tomorrow, Monday, you count 3 working days, the shares are available the following working day for you to sell. That is T+3. We come to intraday trades. In terms of trading, they are not limited. You can buy tomorrow and sell tomorrow, Monday. Yes, you buy Safaricom in the morning, the same morning, once you see the shares in your holdings, you can sell. But at the end of the day, whatever is remaining have to wait for T+3 for you to be able to transact. So in terms of settlement, T+3 remains. In terms of trading, you can do it the same day. But remember, for delivery, you can't buy the same day and sell. So delivery, when you buy, you can't sell what you bought. You can only sell what you have in your portfolio valuation. And that is not intraday. Intraday is where you buy Safaricom 100 shares and you can sell it back 100 shares or less, or even more if you have more in your portfolio. But as long as you have selected intraday, both transactions will be settled as intraday. So all the buys themselves you do the same day. Buy and sell at the intraday. They qualify for intraday trading. Then we come to the role of the parties. Remember, the broker, their work is trading. CDSC is holding your shares digitally and moving from one person to another. Why am I saying this? Because I know now when we come to intraday, it will confuse you how the settlement works. There are people who have bought shares and within the 3 working days, you're not able to tell where your shares have gone. I'll explain that. That's why I want you to understand this. Intraday, you can buy and sell the same stock the same day, but settlement remains T+3. And on the order entry screen, as we will see, you have to tag that order as intraday. So when you select intraday, you come to the order entry screen. When you tag a buy order as intraday, you can sell those shares back. If you select delivery, you can't sell back. So I hope it is clear. When you select intraday when you're buying, you can come and sell back those shares the same day. If you select delivery, you can't. But remember, at the close of the day, 3 p.m., balancing is done. Balance is what you have on T+3. So within the other 3 days, you can't do any, whether delivery or intraday, you can't sell. So the following day, all trades settle as delivery. And I want to understand the role here. The role of the broker, all trades go through them. CDSC, they only hold your shares digitally. They don't know you are doing buying and selling the same day. Them, they only see transactions coming, shares moving from this person to another. And remember, each transaction must have a buyer and a seller. And this seller is not the same one you bought from. It could be another one when you're selling. Huh? So I want you to have that clear, because it will explain now what happens during intraday and delivery. So we first understand with that screenshot liquidity and market depth, because you need this for your intraday to work. Trust me, you need this. So liquidity is how easily a stock can be bought and sold without affecting the prices. Like if you look at the Safaricom, you have so many prices you can play around with. You can easily buy and sell. You can buy from that 150 all the way to 35. If you want to sell, you have 34 all the way to 31. And I could believe there could be other prices. So what that tells you, Safaricom is a liquid stock. Even if you're buying at a higher price and selling at a lower price, there is already somebody willing to buy your shares when you buy at the intraday. But your strategy matters. Don't try to play intraday with a stock where you have market depth on one side, bid have shares, supply doesn't have. You won't be able to do intraday. So high liquidity means easy entry and exit with small spreads. Spreads is the difference between bid and ask price. Like Safaricom, you can say, apart from, because I believe this I took when market was closing, the shares was a bit small. You can easily tell the price difference is small. Actually, this is what I was explaining early in the market. What happens? You can see there is 2 shares at 34 bid. Yet on the ask side we have 31. This is the noise I was talking about, where you have prices all over. And when it stabilizes, you can tell that a 2 can easily come and clear the 963 will clear everything, and market will stabilize at that with 3320 just by looking at the screen. So as long as there is enough shares to buy from and sell, and the price difference is not big, then there is high liquidity, ability to buy and sell easily. Shares with low liquidity, there is a risk of spillage, price spillage, like BAT. It doesn't have that much orders, quantities to buy and sell from. Also, Absa Gold, they have low liquidity, but then they offer high chances of profits at the intraday if you're able to buy at low price and sell at high price. But also easily harder to trade quickly. So for intraday, the shares that give you highest price, highest profit, are the ones that have low liquidity. Meaning what? Yes, you may buy a few units, but you also find it a bit difficult to sell. But once you sell, you're in a profit. The ones that have high liquidity, they have the low spreads, difference between the top prices, meaning even prices are low. So high liquidity, low gains. Low liquidity, high gains. Then market depth is a screen that you can see here for the app. On the portal, it is the same, but now instead of ask, it has offer. It will show all the buy and sell orders at different prices, which have not executed. And it helps you gauge demand and supply. Can you easily hit lower prices when buying? Can you easily hit high prices when selling? Even if not the same day. Even if you are a day trader, remember, even if we are using intraday, your order is not a must you put as a day order. You can put it as a GTD. I'll explain in the next one. So you use this now to time entries. And also, now on the portal you can see the foreigners. That is the foreign buys and sells. You can easily tell when they are coming in and they are exiting. In terms of mutual funds, that is like fund managers and also pension schemes, which buy at NSE, one of them being NSSF, you can always tell by retail participation. If it is a share that doesn't have a lot of foreigners, but there is a huge movement in terms of trades, that most likely is a fund manager or a pension fund, like NSSF. And in NSSF, they trade mostly through fund managers. And these people can easily move prices. You can see all that details on Watchlist. I will come to that. So always watch for unusual volume spikes, because that can tell you foreigners are coming in, and chances of prices going up would be high if they are buying. If they are selling, prices going down. You don't want to do intraday with a share that foreigners or fund managers are selling and pension funds, because then the price direction is the opposite. There is a lot you do as a trader to take advantage of the market. Then you also need to know what moves the prices. One of them is corporate news. Like now we are going to results announcement. That will move prices significantly upwards. Dividend declarations, again the same thing. A company declares dividend, but these days some of them we are seeing the opposite, where price first goes down, then it shocks everybody. It will just moves one day when you least expect. Then management changes, like what happened with BAT. Announces dividend, price starts to go up, management change, we panic, we push the prices down, and it was not a lot of people. They were around 50 who moved the prices down. Now, when we realize our mistake and we want to come back, now everybody want to buy, price goes up. So as a day trader, this is something else you need to track. Then market news and macroeconomics. Tax policies, how are they affecting from the government? You saw the Finance Bill 2024-2025. Those two, they collapsed the market. Now at least we are back. Interest rates. If they are going down, then expect most people from money market and boards to come to NSE. If they are going up, it means now those products are favorable. People will start moving from NSE. Sector specific news, if like now tea is affected because of that war in Iran. But again, we also have the rains, meaning even if our production goes up, exports are limited. So you can always track those as a trader. Then momentum is something else you also need to check. Some of these price movements, they are moved by trader sentiment. That is me and you and traders at NSE. So what you look for as a trader is price breakouts, gaps, and trade continuation. Why? Let's look at that screenshot of BAT. You can see the top price difference is around 1 shilling. But then if you look at the spreads, it looks like it's just two people on the bid side, another 2, 1, 34, 1. Sell side, the offer side, 1, 2, 2, 1, 1. Those are very few people. But they have a potential of moving this price up. Why? If somebody comes with a very huge order, they can easily clear the offer side, meaning this share can even move with a 10 shilling. Just check the top bid and the lowest offer that can be seen. 563 again is 573. The same side on the offer side, 564, 559. Now look at the graph itself. It is telling us something different. I said chaos widow in the mall. High price of 630, low price of 550. Meaning what? If you are doing intraday, that is a 70 shilling difference. So that's how now you start identifying shares that you can do day trading. If this same BAT, the first hours, if it was within 570, then there is no need of doing day trading. A zero price movement, it won't give you anything. But with that spike, you can tell. With a GTD, intraday, Like let's say I had shares in BAT. I'd put a sale order at 6:30 the previous day. GTD sale order. So it's a limit order, 6:30 price. Then GTD of 1 week. Then intraday price in 6:30. I submit at this point in the morning. I would have sold at 6:30. Once I get price alert around 9:30, 9:31, I come back 9:35, place an order to buy back at 5:50, 5:60, 5:70. Intraday is the same, still intraday limit, GTD 1 week. The order will execute the same day because I sold at 6:30, I bought back at 5:70 or 5:50. That's just 60 shillings, and maybe I have 100 shares. That is 6,000 I've just made quickly. And this BAT, remember, I'm also investing long term because even if I put that GTD order, it might not execute. So basically, it will be cancelled and my shares revert to long term trading. So the shares which are best for intraday trading, the ones with high momentum and liquidity, where you're able to sell. Not the shares where you come, you place the order and you're not able to sell. So on the bid side and offer side, there should be orders. That means liquidity. There is ability of people to buy or sell to you. Then in terms of high momentum, shares that are moving with huge gap. Don't try these on shares that move with 0.1. Those ones won't help you. The intraday. Now we come to the difference. Before we come now to the practical order placement. Sijui kama mmechoka. Let me see on the chart. Imekuwa quiet. Are you tired? Or we continue? Okay, it was a chat. It was a bit quiet. I thought maybe you're not hearing me. And I hope you're running something because now we are going to the meat of the day. Where now you run day trading. Use this now for even long-term investment. So now there is a difference between intraday and delivery trading. And I explained earlier. Intraday is where you buy and sell same share within same trading day. So if it is Safaricom, I buy in the morning, I can sell in the afternoon or even the same time after buying. I repeat again, I can buy Safaricom in the morning, 9:30. By 10, price goes up, I sell. I get my money back with profit. Price maybe fluctuates down again, I buy back. Fluctuates up, I sell. And I continue all that game with the same share up to 3 p.m. And for this to qualify as intraday, you must have a buy and sell. Otherwise, even if it executes as an intraday that day and you don't sell, it is still a delivery the following day in terms of settlement. So you realize profits or losses the same day. So you're buying, selling the same day, but then normal settlement reverts the following day. It follows T+3. So the following day, like now if I do intraday today, tomorrow the shares I bought today I can't sell. I have to wait for T+3. Let's say I bought, sold, the net position is more buys than the sales. So I have more shares I should be receiving from CDSE. The following day I can't sell them. I have to wait for T+3. That is why it is called intraday. Now, how do you make profit with it? First of all, price movement. Buying low, sell high. The next one is broker commission, NSE levies. You are not charged on the side that have a lower commission. So you do the total buys you have done, get the commission, total commission, sales, total commission. You compare the two. The one that have a lower commission, you are not charged, and also NSE levies. Again, profit. Then delivery. Delivery is where you buy and hold for long term. That is, if you buy today, the shares, yes, they are credited in your CDLC and portfolio the same day, but they are only available for trading on T+3. So you can't buy today and sell today at the delivery. Intraday, you can buy and sell today. What about the selling part? Selling part, you are not limited. You can sell shares today and use the same credit to buy back, whether intraday or delivery. So for sell side, there is no problem. Problem comes in on the buy side. Whatever you buy at the intraday, you can sell the same day. Whatever you buy at the delivery, you can't sell the same day. You have to wait for T+3. So if you have shares and you want to take profit quickly, then buy back, that you can do at the intraday or delivery. Because selling, you can buy back because you have the credit. But in terms of buying, whatever you buy today, you can only sell at the intraday. You bought at the intraday, sell at the intraday. Can you buy at the intraday and sell at the delivery? No. It has to be intraday. So at the delivery, profit is through capital gains and dividends. There is no commission rebate. So delivery, you don't get commission back, but intraday you get it. So delivery is where you're not intending to sell those shares, but remember you might lose opportunities. I want us now, because we have used the delivery for quite some time, we change something small. As long as you are very careful, you don't do the opposite. And delivery is good for long-term wealth building and dividend strategy. Remember long-term we said you can buy when price goes up, you sell at a profit, buy back at a lower price. So you're using profit to buy back shares. Compounding. Dividends, you're not selling, you're receiving money, you come and buy back shares. Again, compounding. And all these, both of them, they can't succeed without price alerts, which helps you know when the shares come to certain price so that you can take action, which requires you to be logged into the app or portal. You have to have it open. And when price comes to that price, you get notification, pop-up notification on the app or on the portal. It's just like a box. And also, you need to allow push notifications on your phone. I'll check with the developer because I saw it's like these days it doesn't have that option for us to allow. But maybe it is my phone, maybe it is allowed by default. But this is something you need to allow so that when a trade happens, you see the way you get a WhatsApp message, the pop-up. It's the same thing, it works. When the order executes, you just get that notification. You can go to your app and check whether the trade has executed. So we come now to practicals. I hope now we are ready. Let me see the time. Yeah, we can cover within the next, so that the next hour is Q&A. For global markets, I'll just brush through because I plan to have another session. I think today we can cover much of NSE. So intraday order execution. First of all, you need to know different types of orders. You have limit orders where you are putting a price. Limit is where you put a price. Market is where you don't put a price. You are buying at current market price. GTD, good till date. Your order remains active until executed within the days you have put on the calendar. Once you understand those three terminologies, you know what to avoid. One, market order, avoid completely. We have seen intraday and delivery. We are interested in intraday. So you only need a limit order, GTD, intraday. Those are the only options. So the step is you place a limit order to buy for whichever stock you want to deal with. Then you set GTD with intraday option. Why? You want to put a certain price, a lower price. You are not assured that price will execute that day. It can execute within 1 week. So you put GTD of 1 week. And you want the same day the order executes, you sell the same day. So you put intraday. So intraday does not mean if I place my order today, it is today. No. it is the day that order will execute. So if I give it 1 week and maybe it executes on Tuesday, remember I'll get notification. That's why I need push notification. That's why I also need email notification. So that when I see that notification quickly on the app, place a counter trade. That is a sale order. The same day the order executes. Remember, I may have placed an order today, but it is executing on Tuesday. So the Tuesday when it executes, I come and put a sale order at the intraday. Why? Because my buy order executed that day at the intraday. I hope I'm not confusing you. So I put a limit order with a price, GTD of 1 week. Maybe that 1 week, Tuesday, that's when my price comes and it executes. So I need that day, the order to be at the intraday. That's why I'm selecting intraday. When it executes, it's like I deposit that order that same day for intraday. So I can come and sell the same day. I'll come and put my sale order at a higher price at the intraday again and leave it with that GTD. If it executes the same day, now that is an intraday. I qualify for commission rebate. What if it doesn't execute? I forfeit this commission, but on the day it executes, then I have my profit. So as a day trader, that is the only option you can trade with NS. You don't expect price volatility. You have to accept that you either forfeit commission or you lower your profit. And remember, you can't lower your profit because you can't dictate the price direction. So the steps in execution, first of all, a limit buy order, GTD, intraday, submit. Immediately the day that order executes, put a limit order, sell order with a high price, GTD. So that if you get the execution the same day, you qualify for the rebate. If you don't, then it is price movement. And why? I said price movement is very important because remember, if it doesn't execute the same day, those trades are not intraday, meaning you're only gaining through price movement. So you need even volatile stocks that can move in prices. So always use the intraday option for all orders going forward. Delivery unless you're a new person. Why? You might buy Safaricom today at 30. Tomorrow an extraordinary announcement comes. And that's when you are bought. So you put a GTD, tomorrow it's the time it's executed. The same day announcement comes, that price shoots to 100. Would you want to hold that share even for the following day? A difference of 70 bob. You'd want to come back and sell the same day you eat the following day. It's better it goes to 150, but you have taken your 70. If you don't believe, look at what happened with Absa. It just shot with a 4 shilling and it shocked the market. Safaricom, what Safaricom? BAT, there is a time it went to 1,000. If you look at in between, there is a point it shot up. Would you want even to hold that price? You'd want to get out. So that's why when you're placing orders going forward, use a limit, price. This time use intraday, GTD of 1 week. When it executes, you don't be concerned about whether to sell or not. If any announcement can come that day, you can sell. You can easily sell. But if you're purely the people who don't want to be in the market trading, just use delivery. That's why that option is there. Because you don't want to miss opportunities. Price can move when your order have executed. It also helps you lock in gains quickly before market closes and maybe market. Remember, an order executed cannot be reversed, irrespective of the mistake that have happened in the market. Also add price alerts. I will show you because I just want to finish this. Now we go to practicals. Price alerts to alert you when a certain price reaches. And if you're doing intraday, remember you may have other shares within your portfolio. Only sell what you bought at the intraday. Don't try to sell what you bought at the earlier, maybe at lower prices. Because nothing stops you to trade BAT and you had other shares earlier. So when you're selling back, only sell what you bought at the intraday, so that you don't again mess your portfolio unless you want to take full profit. So for long-term purchases, always separate from intraday. You can always see at the order status what you bought that day. That's the only thing you only need to sell at the intraday. The rest, don't try to take profit, because again, it's like you're selling everything. So unless you are willing to take those profits, don't touch what you bought earlier. So for intraday traders, for day traders, always focus on shares which are liquid and where there is a price movement. And I see very few shares move. Always monitor news for anything that may trigger price drop or price rise, and also during results, so that you take your positions easily. Then market depth or order book for analysis to anticipate price movement. If one side the SAB there are few shares, you anticipate price to go up, down. If supply few orders, then price may go up, so that you don't make mistakes. And always take into consideration institutional activity. They can move shares either way, like BAT, APSA. While others are buying, some of the institutions, they took advantage of selling. That's why you saw price drop, because foreigners had not come in fully. So institutional activity can lead to spikes and drops. And understand that intraday positions must be closed the same day if you want to enjoy commission and NSE levy rebates. Otherwise, after that, it's just capital gains price movement. So before we come to this, let's go and see how to do intraday trading. Let me just log into, let me start with the app, then we come to the portal. I want to show you both. Because for institutional, for international trading, I don't want to do the actual trading today. That we can do, I'll show you at the end so that we know whether the timings will be okay. Because I want now to split the two topics, international stocks and ETFs from NSE. So we have, we'll be having two trainings. And all of them, they are free. So, because I know most of you will ask then how much? Nothing. So there we are. Let me open this. So I'm still on the portal. So I want to create a day trading. We'll come to this where we add, but nothing stops me from adding BAT or GRD. Let me use GRD. Here, add to watch list. So if I'm trading and I want to place the order to buy, I'll come and click on the GRD. Don't try to swipe. See the prices, target the lower price to buy. Let's say it's only that it is blank. That's why I'll be proposing we do this one day on a weekday so that we understand. But let's say I've taken the lowest price of 6,300. So I'll come to the buy option, put my quantity. Let's say I want to buy 5 units at 6,300. So don't change order type, you leave it as limit. Then the price, validator, you put GTD of 1 week. Then at the trading mode, you use as intraday. So I'm buying APSA Gold at the limit, a price of 6,305 units. Validated as GTD up to 20th March trading mode, intraday. So that order is active until date of 20th. Either it executes in between or it is cancelled. So if I get to buy at the intraday 6,300, so let's submit. So collateral shortfall, it means I don't have enough ads. I have other orders which are blocking. I may need to remove that. Let me see the space. Yeah, the space is small. Let me just lower the quantity. GTD, let me pick one share. It's a demo account. I don't want to increase that. I may make a mistake and it goes tomorrow. Let me just use one share. I can use a lower price of 6,000. There is no harm. Then I leave limit so that I put price. If I put market, I can't put the price. That's why I'm leaving it as a limit, a price of 6,000. Then validity GTD of 1 week, so that because I know 6,000 I can't get tomorrow, it might come the following day. That's why I'm putting GTD. Then instead of delivery, because if I buy at a delivery, I can't sell until T+3, I'm using intraday. So that if this order executes tomorrow or Wednesday, I can come back and sell. So if I click buy and confirm, right now there is nothing I can do. It is market is closed. If we go here, you find my order is placed. If it executes and I can see that in my portfolio valuation, I can come back the same day it has bought. Let's say tomorrow, I can come back and go to sell. I bought 1 unit. Remember, that's what I bought. Unless I have other units, then at the limit, I just leave it the way it is so that I can put a price here of 6,500. Remember, I'm targeting that difference of 200. Then I move it to GTD of another 1 week. Let's say it executed at Tuesday 17th. Then I can put my sale order on 24th, so that between that day I bought and 24th it can execute. Remember, I have already bought at 6,300. Then instead of delivery, I leave it intraday. Why? The same day Tuesday, maybe I'm lucky I sell at 6,500. That trade will be intraday. What if it executes on 24th? It's no longer intraday. Remember, I bought at 17th. Now I'm selling on 24th. So that's why I'm leaving it intraday, so that if it executes the same day, I get that rebate. If it doesn't, remember my price is still high, I can get within that 1 week and get my money back. However, if it doesn't execute, nothing stops me from holding those shares as long term. Then at one point, when the price starts to go up, again I can come and place the order as intraday for sale. Let me unlock this. Cancel. Let me stop sharing. I'm not using a demo. I'm using a real app on my phone, on my actual phone. So I hope you get it. The reason why I'm putting intraday is if the same day I've bought on 17th, I'm able to sell, that is intraday. I have commission rebate. Otherwise, I still have 1 week to sell at my price. If it sells in between, I have capital gains. I've foregone the rebate. What if it doesn't execute on 24th? I will come again and refresh that order. 6,500, 1 share, GTD again, intraday. So that the day I sell, I can buy back now at a lower price again. Remember, I've made a profit of 200. Bought 6,300, sold 6,500. I come and buy back now units worth maybe 6,000. I've been left with how much in my account? There is a 300 and the 200, around 500 profit, which now I can decide if this 500, because I can't return it in gold, let me buy some long-term stock. Again, I play around with 6,000 and maybe 500. I have another 500. I push it to another stock. I'm using my intraday to build a long-term wealth. Let's go now to the portal. Let me stop sharing this. We go to the portal because the screens are the same. I wouldn't want you to miss on these opportunities if you're using the online portal. And as I said, as long as the systems look the same with what I'm doing, they have the same capability and the same functionality. It's only the logo. Like for AIB, it is blue. You go to another one, is green, but functionality are the same. Yes, I repeat again, it's only the logo and maybe some missing open new trading account. Nothing else. The rest are the same. Let me share this. So just close this. We go again to GLD. I'll click on it. Again, click on the buy button. Same settings. I'll only change the quantity here. 6,300. Leave it as limit. Sorry, quantity is 1. Limit. Price 6,000. I'm buying. Then change validated to GTD. Calendar 1 week. Intraday. Make sure you have selected intraday. Click buy and confirm the buy. That order will go into the system. Once that order executes, remember I've given a whole week. The day it executes, I come back now, I put a sale order. Same settings. 1 share. Limit. This time maybe the share have gone to 6,700. That's the price I'm targeting. Validated GTD. Again under intraday. Date here. Another 1 week, say they are 27th. Let me pick this for argument's sake, but 27th. I can submit sale. It can sell the same day. It means I get commission rebate because I bought the same day, sold the same day. If it's not, then there is a 1 week. It may execute. If it doesn't execute, I come back and place the same order with the same settings for another week. The date it executes, again, I do the same. Buyback, ERT, GTD, limit, my price, and the intraday, 1 week. And you continue with that cycle. Then all that difference is that profit you are getting by another long-term stock. Now we come to price alerts. How do you set them? Under notification, I'll start with the portal. Under notification alerts, there is security alert. This one I put for GLD. Let me remove it. If you want to add, you just click on plus alerts. Alert name ni GLD. GLD for gold. Search security here is GLD. So I select it. When the last price I'm buying, so I'd want when prices go down, so less than or greater than a price of 6,300. Remember my order had put that price. You can give a threshold of let's say maybe lower than that. Or you can always put a threshold, but I will always prefer leaving it as 0 so that it has the same price, 6,300. So threshold you can leave it. Then you can create alert. Then confirm. That alert is added. But remember, this is an alert to trigger me when the share of GLD, the price, goes down to 6,300 or lower. The app or portal notifies me. So that time I know my order have executed. So even if I was watching the main watch list, maybe I'm here at home, just watching other stocks, I'll just get a pop-up here telling me price alert, GOD, price lower than this. I only need to go to my order status down quickly. There is that screen for order status here. I'll just refresh, see my order I've executed, come and put my sale order. Then come back to the security alert, edit this and change when the last price is greater than or equal to now my price that I'm selling at. Let's say 6,700. Threshold, I just leave it as 0. Because I want the exact when it is 6,700. Then update. So when the price goes up again, when I'm navigating the app, I'll get a pop-up one day. I know now my GLD have executed because it will tell me price alert GLD, so I know it is GLD. I'll come and check, has it executed? Money in my account. I come back then again, edit. And I can play around with this price alert for price movement. The worst thing you can do is leave without the price alert. Share goes to that price, you miss the opportunity. Remember, when it executes, you rely on email. AIB may send email later in the night. You see, you may miss that opportunity. Before I move, let's see whether we can spot something here as I go to the app. Add a GLD again. Then we go for 3 months. These are the opportunities I'm talking about. The share have been around 5,000. But here you notice there is somebody who made a mistake. There. Buying it close to 3,000, 3,620. And it is same day. These two trades happened. Then price went back to where it was. Imagine if you had put a price alert, you get that notification. You are buying at this price of 3,060. The same day, you sell at 6,000. Then you come back, Brighter still put the same price of 3,000. If somebody makes mistake, remember, this is somebody who knew what they are doing in the market. And in the market, akunanga uruma. Remember, it is your money. You have put in your money. So usihurumie mtu kwa NSE. Juu hata yeye, if you make a mistake, hata kuhurumia. You are operating within the rules. There is nowhere you are going outside NSE trading system. They are the ones who provided this functionality for us to make money. So mistakes of others could be your opportunity. So let's go to the app. We see where you set the alerts. Sorry, I got dropped off. Huh? You can hear me now? Just confirm you can hear me. Oh, sorry, I got dropped off. I think I closed the wrong screen. Let me just share the app. And I hope you are running something. Huh? Let me unlock the phone. We see how now you set price alerts on the app. We have seen how to place the orders. Huh? So you come to the 3 dots at the top. You scroll to where there is alerts. It is here. What you do on the app replicates on the portal. You can see I already have the GLD notification. I can even delete this. We assume we don't have any alert. So how to create, you just click on the icon that looks like a bell at the bottom with a blue circle. You click on it. It allows you now to put the same settings. GLD. The security that you want to track. Let's say it is GLD. You select it. Last price. You are starting with a buy, so when it hits your price or lower, so less or equal to, then the price, let's say I was buying at 6,000, because I don't want to keep on tracking everything. Then I may not have a threshold. I can remove to 0, and here to have 6,000. Because it is going with the last traded time, I can leave it the way it is, then create that alert. This alert is active on the app and the portal. So when the price comes to 6,000 or lower, I'll get an alert. GOD price less than 6,000. I already know my order I've executed. So I will come and edit the same alert. Now move it to greater than or equal. Then again update the alert. Go to the app and place the order now to sell. When the price comes to that price and I get the alert where now I'm navigating here, because I don't need to keep on checking that. Maybe I'm in KPC, it's the one I'm tracking. I'll get an alert, a pop-up. GLD, I only need to come to my portfolio, see it, come in. If I'm buying, if I'm selling, I only need to come to available funds, check the ledger balance, come and trade. So that's the purpose of price alerts. In terms of push notifications, those ones you need to allow. I believe it should be there. Let me see on the app settings. If I long press, I go to app info. It should be at the, is it permissions? Permissions. For some, like my phone, it's different. It allows all the settings. Yours, you may need to check whether by default, some of the Android they allow. If like I click on all permissions, it should be somewhere push notifications. Like mine, it doesn't have that. So by default, it gives those permissions. If yours doesn't have any permissions, you can just go through the same process. Check for push notification and enable that. I will also check with the developer whether it is there by default, so that when the order executes, you don't need to keep on logging in on the phone. You could even be on another message, or your phone is just somewhere. You just get that push notification, a pop-up, like the same way messages come on your phone. And after that, you already know you have bought. Now you can come back and continue with the second transaction. And if you are to do that regularly, it means all the profit you are gaining, you are building another stock. Then why would you combine intraday GTD and price alerts and push notification? One, GTD helps you keep that order active until it executes. You don't have to come refreshing. Remember, we have seen early in the morning, late in the afternoon, that's when mistakes happen. Then it ensures profits are not lost due to order cancellation. Remember, if you put just an order for a day, it is cancelled. You have to key in it again. What if you don't remember? Remember, mambo ni mingi, masaa ni machache. You have other trades you are doing. You might even forget you wanted to buy GLD. But if it is GTD, then it's also useful when, for high volatile NSE stocks like GLD. We'll see the others, BAT, where prices can spike or drop rapidly. When it drops, you want to take a buy position. When it goes up, you want to be in a sell position. That's why GTD orders are there. And going forward, always use the intraday, so that if you want to take advantage the same day, if there is any announcement, you can easily sell. Remember, for a sell side, you can always buy anytime, even if it is delivery. But in terms of buying, if you buy intraday you can sell, if you can sell the same day. If it is delivery, you have to wait. It also makes intraday trading safer and more predictable. Once you start trading these, then you even go to a point where you start accumulating huge amounts of gold. It is you who will be selling to others. Remember the last time when we did this training? And price alerts helps you to know when prices go to your set criteria without you having to struggle to start navigating through all those screens. And remember, you have your watch list for day trading. Then push notifications, you know when the order have placed, so that you can place a counter order. One very important, and this is the most important, that's why I've never been teaching about intraday. When you do intraday, as I said, that transaction is between the broker and NSE, not CDSE. In CDSE, the transactions will be removed, both of them, the buy and sell. Meaning what? The broker, when they are showing you portfolio valuation for the 3 working days, you see like there are shares which are missing. That should not worry you. The reason is, in CDSE, your buy order, remember it was bought by somebody different. It has to move to them. So you bought from somebody different. Shares have to move to you. Money move to them. But here, remember, you're doing intraday. When you sell, you're selling to somebody else. So shares move to a different person from the one who bought from you. So all those 4 trades are treated separately. So in your side, you have a buy order which have not settled, because settlement will be T+3, and you have a sell order that have not settled in CDSE side. So in the broker side, they only get the balance which was there. So if you bought more or you sold more, yes, on the sell side you get the cash. On the buy side, if you bought more, you notice there is a discrepancy. That should not worry you. You only need to wait for T+3. Remember, the following day everything turns to T+3. On T+4 you have all your stocks there. So what does that mean? If you're doing intraday frequently, always give yourself a window of 3 to 4 days to balance your. You do it like for 1 week, 2 weeks, then you give yourself some time just to balance, to see what you have in your portfolio, so that you don't panic. Your shares go nowhere. It's just that settlement element. On T+4, everything turns back to normal. You can see the shares balance. So on intraday, the day you are doing intraday, that is buy and sell the same day, you might notice there is some discrepancy. But if one intraday order executes today and the other one, the counter trade executes tomorrow, nothing happens to your portfolio. It's only when they do intraday the same day, that's the only time there is an issue with your portfolio. So what does that mean? Going forward, if you can, when buying, always put intraday, so that when opportunity comes, you can sell the same day as your buy order. You put intraday GTD, lower price to buy. If it executes and shares spike the same day, you can easily sell back. Even if you are in long-term investment. Remember, you are there to make money. So how then do you identify shares for your intraday? One, liquidity, shares that you can easily buy and sell quickly. Then trading volumes, meaning whatever you have bought, you can easily sell back. Like GLD, I can't tell you to buy 100 units. Those ones, you struggle getting somebody to sell to. But remember, if you're buying at a lower price, then create liquidity for high price. That's the only time I can tell you to accumulate in a lot of numbers. Maybe 10 or lower. Those are enough. Anything above that, unless you're targeting now to start providing that liquidity, that you can only do when prices go to 3,000. There, even buy, if you can buy even 1,000 and put them there, that is 6 million, put them there. You'll be the one now providing supply at 6,000. Also, stocks which are volatile in terms of price movement, because you want to gain money. And also try to identify at certain price you find prices don't go above that, they keep on going down. It's called resistance level. You want to identify that. Like Safaricom, I don't even need to log in because of time. Safaricom, you can tell previously when it used to go to that 395, it would go down. That is a resistance level. You want to know why. Who is this doing this? Already for Safaricom, we identified it is NSSF. For EABR, it's just panic in the market because of short news. So you need to identify some of these things. And this will help you plan your entry and exit. If a price doesn't go above a certain price, even if you put a GTT forever, it will never go. So, like a good example here, you want to get into like BAT. I wouldn't tell you to buy 10,000 shares of BAT to play with day trading. You can see yourself, there is no much of supply. But in terms of price movement, it is a volatile stock. Price can rise sharply. So avoid market orders as much as you can. Some of the factors to consider: high volumes. In terms of trading volumes, high volumes, they indicate you can easily get in and get out. Price movement, because that's where you want to maximize your profit in. Then institutional activity, they slow down the prices. And also when they do large scale, maybe you want to target lower prices. If they are overselling, then prices will go down. If they are buying like you, remember now you can't get lower volumes. That's why for intraday, it's not every share that qualifies. Also, time for earnings and results, price can swing away either way. So you also need to watch out on results when they are announced, major news, and anything that can disrupt the price movement. And always try to rotate your focus. That's why watch list is very important. So some of the stocks that you can do GRD, you're not limited to this, but these are the ones which I've seen work. The king of it is GRD. Price can move way high. Then there is BAT. It is the next king in terms of price movement. Then there is SMWF. It is one of the ETFs in NSE. But price fluctuations sio sana, but it's also a candidate because even with 30, 40, 50, 20 movement, it's a good one. Stanchart, Stanbic, Williamson, Kapchorwa, Jubilee, Kakuzi, Rimurti, these are shares trading above 200. They move with a price of 4, 5, 6 in a day. So you can tell how many number of shares you need. In GRD, when you can need one share, BAT even one share can do, SMWF even one share. The others may be 10 shares if you are to make the same difference with the GRD, BAT and SMWF. But nothing stops you from buying huge units. You just keep for yourself if prices go down. For intraday, don't try to do it with all stocks. You want to place one order for Safaricom, one for Equity, one for... it can mess you. For intraday, where you are targeting price movement, even if the others you have put intraday, if you are targeting to sell back, just target few stocks. If possible, 2 at maximum. Intraday, don't try with many stocks. You mix yourself and end up making mistakes. Also diversify in terms of positions, that is the order numbers. You can put multiple orders on the app. One with 6,000, the other one with 6,300, another one with 6,100, another one with 5,500. Whichever is hit, that's what now you use as a counter trade. And remember, when one executes, remember to cancel so that when you put counter trade, you're not selling to yourself. Because that is called self-trade. It is prohibited at NSE. So when one executes and you want to quickly take the counter position, cancel the other orders for the same share, you do the opposite side. If you are buying, you sell. Otherwise, don't try to have the two positions. You might end up selling to yourself. But if you are doing at a high price, then there is no risk. So that you are buying at lower prices, you are buying orders at lower prices, but your sell order now it's a very high price. But you need to make sure the next orders or any amendments you're making doesn't match that price, so that you don't end up selling to yourself. But in the market now, with that statement, I don't think there is nothing you can't do. Put multiple orders at different prices. When one executes, do a counter trade now at a very high price of all the orders you have, so that you don't do a self trade, leave it. When the next one trade executes, do the same. With that, you notice now you have created a cycle of day trading. And as we said, there are mistakes people make in the market. They might come and clear all your orders, and you go home with your profits. While you are doing that, avoid over trading. Just trade with what you have set up on your day trading watch list. Also avoid, both when doing intraday and long term, fear of missing out. That should not, don't ever even think about it. Prices are going up, let them go up. It wasn't your opportunity, it will come one day. Don't enter a stock because of FOMO. It has left so many people with losses. Your portfolio is in a profit, but you can't sell. That is a loss, because when price goes down and it stabilizes at a loss position, that's the only time you can take your profits, which are loss. So never get, even if people discuss, even if people say Safaricom will go up 1,000,000 times, don't chase the prices. You buy because, one, you have made a decision and that you have money. For intraday, as I said, always maintain breaks to have clarity on your portfolio and also to focus. Again, too much greed, you might end up messing yourself. And always have a tracker outside, either Excel or on a paper, so that you know what is happening and keep running. And also note all the mistakes you are doing along the way, because that's how we run. I don't know what time it is. It's 5:20. Maybe what we can do, because international stocks, how many slides? There are several. Let me edit here with NSE. We go to Q&A. Then the next session, we come straight to international stocks. Purely international stocks, because there are sites I would want to show you. Stockanalysis.com, TradeView, Yahoo Finance, and FinViz. Why? Stock analysis gives you fundamentals, how companies they are performing, identify through graphs. TradeView, technical analysis, if you like candlesticks, that's where you play around with it. Yahoo Finance is purely news, but FinViz helps you identify undervalued stocks. I've never seen it work for NSE, I don't know why, because this is an opportunity. If you go to this site, FinViz, I don't know whether I can zoom in, that one. If you go to it in your international market, try to filter with Akina PEs and all the others. Just Google what constitutes a undervalued stock. Try to filter with all that. Make sure everything is below 1. You can get so many good opportunities to enter in international markets and buy value stocks. I hope it can work for NSE, but unfortunately it only works for international stocks. So these ones I would like we go through next either Saturday or Sunday. I'll see which one I can do international stocks, then one for NSE. But I also, as we see, there's also portfolio building. I can't do this if I don't do global, so we can do that same day. Then we come to this one, trainings, because I want now to split international stocks. You have seen now even day trading we can't finish, even with one session. We need like 5 more sessions just to complete intraday. So I want to increase the daily trainings. Maybe I will find within the day, within weekday, when we can do daytime and when we can do evening. Then weekends, Saturday and Sunday. Saturday NSE, because I think most people would be available. Sunday international stocks, but I'll keep on alternating. If this Saturday is NSE, the other one is global. The next one, global, then NSE on a Sunday. so that we don't miss. And all the sessions will be uploaded on my YouTube and TikTok. TikTok, I have to break the videos into 4 videos, but if you want to see an interrupted full video, YouTube. Then, because now the sessions may increase, there are also other products I want to start training. We have done NSE, we have done global, we did boards, we did treasury bills and treasury boards. That is for primary. So I want to come and train now secondary, because primary is easy. But for treasury boards and bills, I will show you how to open CSDDO account, bid on primary, get your board. Then how trading in secondary market works. Then for those who are who want to also invest in pension schemes and plans, SACCO savings and bank savings. And a topic that I would love to also introduce is Forex, for those who may be interested. And you're always free to support these free trainings. That is the number, the name is there, 0723384775. It's optional. Let's go to Q&A. If you allow me, we go to Q&A so that we don't miss on the questions. We are on consensus. We do international stocks either within the week or the other Saturday, so that I cover Q&A. That's fine. Okay. Let me just go to Q&A. So the first question I have, I thought that 2026 mini counters will record reduced profits due to war threats, due to lost market, especially those exporting. I don't think there will be any effect. The war doesn't have direct effect on the prices. It only have effect on performance. And it is not many stocks that will be affected. They also have other markets. And this war, I don't think it will be permanent. Maybe it's only this month. Then things stabilize. And we also have other markets. What time did you say is the best to trade? If you're looking to do the trading, as I said, 9 to 9:30, that is the time orders are being put in. That time you can't see anything. Also 3 p.m. to the following working day, market is closed. You can't see anything. Between 9:30 and 3 p.m., that's when you see the market. But remember, 9:30 to 11, prices just jab wave. They hit anything along the way. So the graph can be everywhere. Market closing 2:30 to 3, the same thing. So if you're targeting lower prices, the best time is between 11 and 2:30. That one you can tell where the market is going. If it is going up, you can put maybe the current price to buy. If it's going down, then GTD with a lower price. Is there a possibility Kenya price rising above 5 this year? It will depend on many factors. Remember, this has also entered the space of speculative stock. It can go either way, but there are chances, because it is also an MSCI index, unless it is removed. If you see it removed, then no, things have gone south. Can you buy and sell then buy sell the same day if the movement is up and down between 9 and 3 p.m. Yes, you're not limited to the number of buy sell transactions you can do. You only need to be aware of commissions, so that they don't eat on your price movement, and also target a volatile stock. Splits, I think I explained with an example. Okay, there is a swing trading. I think that in NSE, it's a few stocks you find with that swing trading, very few. But again, that's where the graph comes in. Where do I get real-time news on NSE stocks? Business Daily and also Kenya Wall Street. And as I said last time, Kenya Wall Street ni just Unverified news, you verify that with Business Daily. Take on Home Africa stock. Home Africa is more like Uchumi. So I wouldn't tell you to invest a lot in it. Future of Frame Tree, is it a stock I can speculate with? Again, those speculative stocks, just put what you are ready to lose or what can be locked in a loss position and hautafeel anything. If you are the people who ukiona iko red you panic, then I would try and avoid these stocks. Why do stocks go down after book closure? Because the people who are buying after book closure are not entitled to dividend or bonus. So the price have to go down with the same ratio so that they are not buying at premium. They are buying at a lower price. Risk management, I think that I've handled. Put on what you are able to risk and always be in the market to minimize those risks. And try to use price trigger and notifications so that you don't miss opportunities. But in terms of money, put small amounts. Don't try to do day trading with a lot of money. Are you wrong pressing the title? Yes, the title. If it is adding shares or removing or even renaming, I'm wrong pressing the title. How do you add another watch list? That you can only do on the portal, the plus sign. On the app, you only have the 3 because of the space on your phone. Remember, each watch list carries some space on your phone. So if you want to make 4, maybe on the portal, because the portal is using your laptop space. How BKG pays dividend? Juu nilikuwa nimenunua before book closure and not yet received. That one, reach out to BKG themselves. If you selected M-Pesa, that could be the reason. Maybe they sent a check. Some of these registrars, they are frustrating the market. You select M-Pesa, they decide not to pay through M-Pesa. But BKG, you can understand it is a Rwandan company. So just reach out to them. They will advise. They can always reissue the payment. Some of them, when you said the form, they will actually send you that money with M-Pesa. Or there could also be some delays. I accidentally removed the default dashboard. How can I get it back? That one, unless you clear everything, close, exit, clear cache, log in again. It will reload everything afresh. But you can still recreate it by adding all the stocks that were there, that are shown on the, when you're adding on the plus script. You just select all of them, save, then you come again and use the delete icon to delete what you don't need. Masomo ya leo ni advanced to arai, beginners tunaona dust. Not really. I started with a small introduction. That's why I didn't want to do day trading before I trained delivery, so that you understand. But now going forward, because we have done intraday trading, now from next week, now we go back to the beginner combined with advanced. Does additional data like that possible using phone? I must use the laptop. There are some you can't see on the phone, which are available on the computer version. That's why for me I use both. Phone to track the minimal data, that is the watch list, the market depth or order book, because the phone again, order book have more prices. Then use the portal to see foreign participation in other sector wise trading. So app for watch list, for market depth, sorry, to see the prices. Portal for additional details. Portal has more information. How do we get to that dashboard? It's only for AIB. Even on the other brokers, if the app is if the online portal has the same look and feel, you only need to go to the plus sign. Remember I added a blank dashboard, then I added my widgets. So you go to that plus sign where we put the cursor, it tells you add widget, select dashboard. It will just add, that is watch list, and add the other screens. So the mobile app will not replicate onto the web portal. Yeah, they don't replicate in terms of settings, but only alerts, the ones which save on the dashboard. Remember, some of these they save on the phone or laptop memory. So for watchlist, once you create on the phone, that is for the phone. If you create on the portal, that is for the portal, because the settings are also different. Each saving on the phone and the other one on the laptop. That is on your browser cache. Can I use the app to create and delete watch lists? Specifically for the app, not for the online. Is SCBK, Stanbic and DTB overvalued? No. There is no stock at NSE which is overvalued at the moment. And you can buy them as a dividend investor. If you are looking for capital gains, the prices are way high unless you are doing day trading. These are good for day trading, but not long-term capital gains as they are right now. Intraday trading, I hope you have understood how it works. Buying the same share same day, selling the same share same day, and you can do multiple transactions for the same share same day. But the following day, everything reverts to settlement. You have to wait for shares to settle. It's only trading that is allowed for same day. Settlement remains as set by NSE. Yes, the tutorial I'll be uploading on my YouTube channel. I'll be sharing the links back to my social media accounts once I'm done. Charges for intraday, commission remains. But now what we do, at the end of the day, we take the total buys, total sales, compare the total commission. The one that has a lower commission, we don't charge you. Also NSE levy on that side. So if the buy side have the lower commission, you don't pay commission for all the buys. You did the intraday. But you must have a buy and a sale order the same day for the same share. So intraday only qualifies when you have a buy and sell for the same share, same day. How to know the lowest price to bid for day trading? This one, you use the graph first of all to see the direction the prices are moving, and also order book or market depth to see how far you can go down. That's why you have GTD. It's the same way as the normal trading. Only here you are putting intra day, and as I've said, going forward it's better you use the intraday rather than delivery, so that in case there is anything triggering the prices to go up, you can sell the same day. Because as I've said, between now, maybe quite some time, you start seeing some changes at NSE. Talk about the charges. That one I think I've confirmed. Is intraday trading really possible at NSE? Tried severally, but it didn't work. It only works if you are hitting the wrong prices. As I said, you have to target lower prices with GTD. The same day it executes, you target to sell at a higher price. If you manage to buy and sell the same day, that is intraday. And it's only possible with GLD. GLD you can do it, SMWF and BAT. For the others, it's more of a gambling. Even EABL. I use SBG Securities online app to buy and sell. I can only see the day orders and good till day. Where is intraday? Unless if it looks different from AIB, any platform that is different from AIB, you won't see intraday. They don't have it. SBG, I'm very sure they developed their own platform. If they developed, they moved from the original developer who have developed for AIB. They are the only ones who introduced the intraday. So if they don't look the same, then there is no intraday. Unga also shot up by 9% in one day. Yeah, even that you can. That's why I'm advising if you can be doing intraday instead of derivatives, so that if there is a price spike, you can easily take advantage. Yeah? How can someone place orders for offshore market using scope market? Let's tackle these the next time we are going through offshore, but their mobile app allows you to trade. Yeah? If it's not within their app, then they use Meta 5 or Meta 4, depending on what you download from their app. I will show you because we are working with them on a project as AIB. You can always use them. It is easier to use the app. I think they also have the portal. So the intraday option is only available on mobile app. It's also available on the portal, not just the app. Commission limit against using intraday. I think that I've explained. When you're trading, you pay commission both ways, buy and sell. If it is intraday, we compare the buy and sell side. The side that have a lower commission, we don't charge you for that day. And you must have done a buy and a sell order the same day. GTD can GTD be more than 1 week? Currently, we have set it to 1 week. I think I can try and see if we can extend it. Is it me you can just hear? I think this is the time I had dropped. If I have a GTD buy order which is cancelled without execution on period drops, is there any notification to that effect? No. That's why you need to know when you have put your GTD so that you can come and check. If there is no notification or email on execution, you know it has been cancelled. But remember, you're also logging into the app. You can always check your orders to see if they have executed at least once in a while. The problem is the broker put price margin between maybe GLD, then the price go down below 5,500. You're able to buy due to price margin. I hope it's not about the person who bought the 3,000, because GLD doesn't have a price limit. It is 0 to 12,000. Huh? So that's why you need to be very careful with that share. When you're buying, put the right price, because you can end up hitting 12,000. If you're selling, put the right price, because you can easily sell at 0.1. There is no price limit of 10%. Also SMWF, those they don't have. This KPC, what is your take? The price likely go above or down? It will depend. Give it a month. For this month and next month, it might stabilize around that price. Then it might lie to us it is going up. Then after that, that's when we know whether it will stabilize. Once it is stabilized, you will know whether the price is going up or down. Why am I saying this? Institutional investors, they got some good percentage. Who was in that? NSSF. Ile ukora tu anafanya na Safaricom is what is in KPC. You put an order to prevent prices from fluctuating up and an order to prevent prices going down. But it is not an order you as the investor you can see with your own eyes. It's called a disclosed order. You only see a few quantity, but behind it, there is a very huge order. It is allowed by regulations. Because the next question would be, is it illegal? It is allowed by regulations. Oh, you are to show us where to get news on the portal. Let me see whether I'm still logged in. There is a widget for news. You just added let me see if I'm still logged in. Let me quickly show you. Let me share this. Where is it? Am I sharing anything now? And I hope I'm still audible. So you go to the plus sign where there is the cursor on the bottom right, you look for market news. Market news. Then you click save. You tick on it, you click save. It will be added at the bottom. Mine already had it. Let me see where it is. It is here. So like today there is no news. If you are to do Monday to date, let's see whether there is anything. Unfortunately, it clears. Let me see, because it's supposed to bring something. Yeah, it clears the news. But anything reported from NSE, you see the details here, including subject. Now at the news section, that's why you'll be able now to see the details. That is a box. Only that I think it's because of data vetting by NSE. They usually limit the data to how long you can show. But that is the screen. I hope you have seen it. You just add the news, and it's only on the portal. On the app, you can't see it. On the app, it's just notifications which you can't open. On the portal, at least, you can see what the news is and what company it is affecting. And from there, maybe you can tell the implication before it is even released. How do I remove counters from Watchlist? On the app, you just click on the icon, the delete icon. On the app, that is on the portal. Delete using the delete icon. On the app, you wrong press the title, my Watchlist 1 or whichever watchlist. It will pop up with no shares with that delete icon. Click, then you save. Can you please help us to do intraday for specific share tomorrow for practicality? Let me see if I can record video and do it. However, if I have some time, I can drop a link, then we can join and do it. Capture likely to offer bonus shares this year. Capture they gave last year, this year they can't give it, is just dividend. They just wanted their shares to have liquidity. At least they increase the number of shares in the market while still maintaining the price lower. So this year I don't think, maybe dividend alone. What informs your assertion that the war will end next month? This war cannot go for a whole month. There are no resources. Even US, they had said it might even end this week because they don't want to continue with it. It has a very huge political and also economic effects, which they don't want to drag the whole world into. Already you have seen other countries getting interested in the war. There is Russia, there is North Korea, and also China and India. Now, when those four join in, it no longer becomes now Iran, Israel. It's a world war. So then I don't think even Trump would want that. He knows the consequences. He would want to call off the war array, so because it also affects his own country's economy. The most likely scenario would be like what we have in Ukraine, Russia, where they are fighting quietly without affecting other countries, or in Iraq. But hopefully they just stop the war. You can always check the news, credible news. But these days there are so many fake news coming out. So you may need to check even Yahoo Finance and also Al Jazeera and BBC. You see their position. Could you explain again DCA? DCA is where you buy shares irrespective of the price, but when prices are high, buy small units. When prices are low, buy more units. Now, if you have shares and you bought at a higher price, prices have gone down, that's the time now you buy a lot of shares to push your average cost downward, like what you saw me do with CIC. Where and how do you confirm if you be able to receive dividend via bank or M-Pesa? That one you can only reach out to your broker. They check with CDSC system. Broker will be able to tell you. Talk about the Simia Africa shares. Is it a good for speculation? Well, some of these stocks, just leave them. Go to stable stocks. Even if people are making money, most of them, they are losing money. Because yes, you buy, you are not able to sell. So some of these stocks, the ones which don't give dividend, it's better you lose that opportunity than listing. But if you still want, you can buy. But I wouldn't tell you, some of these stocks, they are not that stable. There's another question. There are many questions. Where is the other question? Can you advise one to open 2 different stockbroker accounts as a way of diversification? It's not worth it. It's not worth it because one broker have a different commission. You end up overpaying when there is no benefit. Unless you want to use one broker for day trading and the other one for long term, which again still doesn't make difference. When you place a price alert, for example, BAT 500, does the alert become inactive once I've sent you a notification, or it remains active until cancelled? It will remain active until you cancel or you delete. KPC was overvalued pre-IPO, not at the moment. Where is this question? It keeps on fluctuating. But not at the moment. What has changed in a week? Okay, some of those, as I said in the previous training, were just politics of the market, just to make it look like it's not a good stock, and others making it look like it is a very good stock. Now, just give it a month or two. That's when you know whether it is overvalued or undervalued. But based on its peer, that was its price. Kenyan siko 9, KPLC iko 13. But again, if market drops, expect the price to drop. And again, it's us, remember, as the public, we have to 2.5% to drive the market. It can move either way. Am I allowed to do data scrapping for the counter prices several during the trading days in order to visualize? If you're able to do, you can do. There is nobody to track you. But unfortunately, I don't think you can do it on the portal. The way it is designed, maybe from stockanalysis.com. You can try. If it works, all the best. You are free to do it. Because it requires you to be logged in to do that data scrapping. But if you have advanced Python plugin, maybe you might be able to do it. If, for example, I press intraday buy or sell 1,000 shares in the time of executing the buy/sell transaction, there is only demand for portion of 1,000 that I may either be buying or selling. Does the sale execute? Okay, in terms of trading, it just follows the same way the trading works. If you put a price of 10 and there is 500, and you had put 1,000, it will only pick the 500. The balance will remain now for the following day because of GTD. And it will continue until your price is filled. If there is nobody selling at your price, then your order stays until it is cancelled. So in terms of buy and sell, if you put 1,000 on your side, you're not able to lock the quantity that can execute. It executes with what is available. Then the balance still remains until you either cancel or execute. Is Family Bank likely to be listed anytime? Yeah, very soon. They were working on listing KPC, so Family Bank should be following soon. Would you classify Unga as a speculative stock, growth, or dividend? Unga is more of a growth. It's not a speculative stock. Its price doesn't allow that volatility. Does it mean you can't edit limit prices between order placement and GTD? You can. Order modification, you can modify quantity and price. The other details is what you can't amend. The best you can do is cancel and place afresh. But price, quantity, you can always amend in between. Does SMWF price move? Not really. It's not that volatile because you always find that price difference ni kidogo sana. The spreads. That's why it doesn't move a lot. And you can do intraday trading because of, but you target to always buy at a lower prices using GTD. Why is there no 10% limit on some counters? ETFs don't have a price limit. It's only on shares because shares are actual company value. You don't want a situation where Safaricom is valued at 0. ETF, even if price goes to 0, it doesn't affect the underlying asset. For shares, we can't allow that. Even in international markets, they don't have the 10% rule. But when it continues to fluctuate, they usually halt the market for some minutes, identify some potential demand and supply to stabilize the price, then trading continues. That is international markets. NSE, 10% has to be there for shares to avoid market capitation at NSE going to 0. Mostly it is just to protect NSE reputation, because if shares go to 0 price, then it means NSE capitation is 0. But ETFs, they don't affect, and they are not many. Learned today that I missed too many opportunities to this year last week. You didn't miss a lot. You still have this week to go. In the app, I use GRD. Has a limit of 56.45 too. Which app? Not AIB Digitrader. And if it has that limit, again, sijui kama tuko na mtu wa brokerage hapa, you have a claim there. Any broker who is limiting GLD, I just said that to CMA. You tell them you're missing opportunity. Actually, take that screenshot of 3 months. It has somewhere it traded at 3,000. Just tell CMA I wanted to trade at this price. I have never traded this price. Got to NSE regulations. Take that screenshot where they say ETFs don't have a price limit. Said it. That's somebody who have made a very serious mistake. And hopefully it's not ZD. Because GLD doesn't have a limit. You have seen when I was placing my order, it was 0 to 12,000. Huh? You actually have a claim there. If you can prove you try to place an order below that price and it didn't go through. These are mistakes that bring down brokers. Huh? Sorry to take you back, but is the online portal specific to a broker? Yes, or even the app, they are specific to the broker, only that developer is the same. Huh? So if you log into AIB, that data is AIB specific. App or portal. If you go to SIB, specific to them, but developer is the same. That's why all of them, they look the same. Huh? Are you charged for bids that don't go through or cancelled bids? No. No broker should charge you. You only charge for a fully executed trade. That trade that I've executed, whether partially or fully, as long as there is a buy transaction in your account, that's what is charged. The balance is not charged. Minimum units of GLD would advise for day trading. 1 is enough. Maximum don't go above 20 because of liquidity. But if price goes to 3,000, that time accumulate as many as you can. Then when it goes to 6,000, you are the one who will be selling to others. You are actually the one to be dictating the price. You can even decide it will be trading at 8,000 and there is nobody who can stop you. Putting alerts, just go to notification alerts on the portal. There is that second option. It will give you the screen to put the alerts. On the app, 3 dots, alerts, then you can create. I will upload this video. Can you advise one to open? I think these have clarified, not advisable to have multiple brokers. Possible to briefly touch on market trades. And statistic widgets, what do they show? Market trades will show you what is trading across the NSE in terms of the shares. And statistics will just, there's a sector statistic that show you how each sector is performing at NSE, specific at NSE, so that you can be able to tell whether foreigners are buying which sector, whether they are getting out and such. And market statistics, we just give a breakdown of the market. I'll do next time when I'm doing NSE trading in full. ZD Trader also has set price limits for buy and sell. Do you think this can make intraday? Intraday, as I said, it's only available to the broker, to the developer who have done AIB DigiTrader. If you go to a broker who have the similar app, that one is enabled for intraday trading, because intraday trading started in India. The developer is from India. They're the ones who came with that analogy. So ZD doesn't have, because ZD doesn't, you using ZD, you're not hitting NSE. Basically, NSE trading for ZD is Safaricom itself. It's one account that is trading. It's not everybody in ZD. You are submitting to Safaricom, they get a huge order, they submit to NSE for a buy, and also another huge order for a sell. At NSE, Omnibus account is allowed to trade both buy and sell side. There is no debate there. There is no intraday. So for ZD, unfortunately, there is no intraday. Also, if the broker platform is using doesn't look like AIB DigiTrader, and also portal like online portal for AIB, you don't have intraday. It's only specific to that developer. That's why as AIB we can't just move our system, because you as the client will lose that functionality if we move to another developer. It's the only unique product you have in the industry. Would you know if FIDA have online portal? Yes, FIDA, they usually copy AIB. So if you go to their portal, you see it is a similar portal, similar functions, but there are some which are missing. I know they have intraday, they have account opening, but they don't have early settlement. And I believe some of those functionalities, they are not working, because I have also tried. So they have a portal. Just go to their website. They have a portal. Anyone who have a mobile app that looks like AIB DigiTrader, they have a portal. When looking at the market depth, do the sell buy orders reflect the entire market or specific orders placed in the market through the app or browser that I'm viewing? It is all market. What you see there is whole market. And that's why I always say there are disclosed orders which you can't see. If you go to the watch list, you find there are so many orders executing on foreign buy and sell columns which you don't ever see. Those they come and close quickly. Inakwanga ni chap chap. Those ones they don't wait. And that's why I've said even Safaricom there is something called disclosed quantity. What you see there is not what is behind. If you see a price like 9, there is always 5,000 which never clears. But prices, if you go to market trades, the 9 is recording trades. Know that 5,000 is not an ordinary order. There is a very huge order behind it, clearing slowly. First of all, it is done to avoid market panic, because you might see there is a very huge order that you think it will not clear. And maybe it is a fund manager who is closing with another fund manager. Closing means they have already agreed to buy and sell at whatever price is there. And that's why they put just a small order to spike the market, you lower the price, they execute their trade and go, and leave you now struggling with the prices. Is it possible to earn good money by focusing on intraday trading for 2 counters with start of capital 25? Which is the best approach? I would advise you split this amount into 2. 6,000 put in intraday. The rest just put in long term capital gains like Safaricom and Absa shares. This 6,000, use it in gold. Play with gold. Make sure the price difference you are buying lower, either 6,000 or lower. But when you're selling above 6,300 so that you make profit. But then do this regularly until you get the cycle. Once you get the cycle, now you can risk the whole amount. As a beginner, don't try to risk the whole amount. Kingdom Securities app have a limit for GLD, and you as a client, you have a claim, I've said, to CMA. Okay, but please don't do it. Do you know how much they can be penalized, Taki? If you go there and support that, you put an order of GLD to buy 1,000 units, that is 6 million, which they failed to honor. And you wanted to buy it. You see, umeona kuna mahali trade at 3,000. Na difference of 6,000. There is a difference of around 3,000. You can support that. Trust me, they will be in a very hot soup. Only that brokers also find a way of navigating CMA. They'll try and argue that it is you who didn't. Even if the system is showing, they know you can't take a screenshot. That's why at one point you saw brokers had limited screenshot. Because of those claims, we have been hit with them and we know how painful they are. If you are not able to satisfy CMA, you have to pay the client. So KSR, I know most of these, I know the app is similar to AIB. This is the problem of market copying. You see, when you copy, you don't even copy the settings. Huh? It is there in NSE regulations. Let me even look for it. I wish I have NSE. Just look for NSE trading rules, ETFs, whether they have a limit of 10%. It is not there. They are actually making you lose opportunities. Huh? You saw on AIB, it is 0 to 12,000. SMWF, the same thing. Do you mean the order book on ZD Trader is not reliable, is setting market direction real time? Explain it, please. For ZD, it's also fetching data from NSE, but the way we had designed it, because I was part of the team that worked on it at Damari, they had not realized you need a real-time data refreshing data. You may find it has some delay if you have to compare with AIB, or any other broker app, or even Dosika or My Stocks. Because Dosika, My Stocks, AIB, all of them, the development is based on what happens at NSE. However, ZD was developed by Safaricom in-house developers who didn't know about NSE trading. Huh? So you are the ones who are showing them. But they quickly went ahead to launch something that was not complete. So you may find data refreshment may have some lags. Huh? Yes, they are connected to NSE, but in terms of data refreshing, it might be slow. Or maybe it's not even there. I have not interacted with it a lot. Because for me, even if it is a product that was snatched from AIB, it's not a product I would want to maybe inaitangwa nini kuharibu. It's part of my baby, so I don't like interacting with it a lot. But from what I've seen, it's like that part they didn't implement where it refreshes. So if you find there is a lag in price, always cross check. And again, for ZD, unfortunately, you are not buying directly to NSE. It goes to Safaricom. Safaricom submits to the NSE through the broker. So basically, there is a time lag. It has some loopholes. I hope they can take some time just to make it better. FIDA has a limit on SMWF. Okay. But this I know why. As I said, it's because of this habit of copying whatever they see from other brokers. You see, when you copy, you forget there is settings which are specific to the broker. Like for AIB, if I set it doesn't replicate to FIDA or Kingdom, they have to go to their own platform set. Share prices likely to drop come to the election period? No. I explained this last time. Elections will not have any effect on Markets, reason being, investors, you have a digital platform. You don't need to work to broker. Brokers have their own work from home arrangement, NSE the same. So market can only be affected if those three parties don't meet: client, broker, NSE. But now with the digital platform, you'll still be trading as if nothing happens. Don't panic. Even if they talk, they want the prices to go down, they buy as foreigners. Simuliabia na Didinyoro, we have Kenyan foreigners. So nothing should happen. Nothing at all. For someone who is not interested in dividends at all, can I just focus on GRD and BAT safely? Or which other combination would work without taking too much risk? I would want to understand why you don't want to concentrate on dividend, because all dividend stocks are capital gain stocks. So if you're saying you don't want dividend, then it means you don't want capital. You want you to speculate. You just want to speculate, which is very risky. BAT, Stanbic, the ones which I've shown you, they also give dividend. And as you wait for dividend, if price goes up, you can make a decision to take dividend or sell. So if you're not interested in dividend, you can concentrate on price movement. Buy any share, even if it gives a dividend. When prices are way too high, you can sell forfeit dividend. But as you learn, as we continue with this training, you will realize in NSE, you don't have a choice of capital gains and dividend. Capital gain stocks are also dividend stocks. That's why when I'm training, I don't split the two. Because I know what you can gain with a dividend stock is what you can gain with a capital gain stock. Because all of the NSE stocks, 95%, it's only GRD and now these others for speculation, which are risky. Instead of going to them, just buy Akina BAT, GRD, and Akina Stanbic. When dividends are announced, it's not a must you take your dividend. You can sell in between. But remember, when you sell, you may never buy at a lower price. That's why you need to be very careful. In the next training, now we are coming, because now we have learned day trading. We have learned how to grow wealth. Now we come to beginner steps. What you need to do when you're in a profit. Because it's not a must you take profit. You may take a profit, you lock yourself. There are pointers to when you can take profit. That's why for those who have reached out and you have asked whether to sell and I've told you don't, it's because there are indicators the prices will go up. Like now, somebody telling you to say, okay, not Kenyan, KCB and equity. Hey. And they have not announced the results. KCB, yes, they announced, and that's why its price is going up. Equity, they're announcing either this week or next week. I wouldn't advise you to sell. Because buying back at lower price will be a hassle. How long have you been trading, investing? I joined AIB 2007. I've never changed brokerage. So all those years, I think next year it will be my 20th year. My own portfolio is somewhere. Let me not tell you where it is, because I don't want to give you hopes. While me, I bought shares at lower prices. I bought shares at lower prices, so, and I keep on playing with the game. So 20 good years of investment, developing systems, training, trading. So I don't know whether we have other questions. Let me see. Yeah, thank you, Shaban. CMA regulations. So you have a claim. If you can prove you have tried to place an order at a lower price, which have ever gone and you didn't manage. Like gold, you have 3,500 in between. But again, CMA would look at that and ask, Kingdom, why didn't you do it? Brokers will say we have been changing system. You know, that is a song in the market. At that point, you have no cream. With that, I think I have exhausted all the questions. So on the same social media, we'll announce the days that now we'll have a continuous training. At least now weekends are open, Saturday, Sunday. Weekdays, I'm not sure whether you people can be available at night, evening. Maybe you can confirm on the chat if you're available on the evening, though I will send on WhatsApp group and Telegram to just see if there is interest for training at night. Because of those people in outside the country are more so flexible for day training, but that could be only be 1 hour or 2 hour. Then weekends again, afternoon or even morning hours. Saturday morning hours, Sunday afternoon, so that we cover all those products. I want you to diversify your portfolio, and all these trainings are absolutely free. So with that, unless you want to buy soda, that is the number 0723384775. It's also my WhatsApp number. Let me show you here. It's at the end. For those who may want to reach out for support, and support is also free, so don't worry. Let me show you that number here. It's jumping. Let me put on the chat 0723 So if you want to reach out, that's the WhatsApp number. Message, just said WhatsApp. Though you can still call if you want. If you feel WhatsApp is not clear. So that is the number, WhatsApp number. You can call anytime. If I don't pick, I'll call you back. That's why I insist on WhatsApp. So that if you said a WhatsApp, I can easily see it even if it is later and respond. Missed call, I will still call back. You can call through WhatsApp for those who are outside the country. Utilize the opportunity when it's there. And as I said, for the product, I don't intend to charge. You first get the basics. It's because I know how much you people pay. And it's one person who broke my heart because you charge 8,000, 10,000 per session. At the same time, you come to the broker, you still want commission, and you have charged the same person. You know, those mathematics hazikuingiana. Then I decided, wacha ni train for free, because if people are taking advantage of others, and you as the investor, you don't get to know. So it is a sad story in NSE. There are no regulations which can stop them from that. It's their business. But hopefully they are giving you information that helps you make decisions in the market. I know even NSE they charge. And that is the saddest thing. They should not be charging, because they are charging you to learn what they are giving you. So I would like to challenge them. We offer everything for free, so that investors, they said 3 million. 3 million you can't get by charging people. It means what you are getting is traders who are not educated. They can make mistakes. They make losses. What a session not captured. Knowledge locked. Karibuni sana. How long does transfer take time, because I'm struggling with a broker? Transfers, they depend on CDSC. Actually, even as we have that issue, CDSC, their processes are manual. You do a transfer today, they would approve it next month. It's not something AIB can be able to resolve, even in a broker. But give it time. They have to call you one day to make that transfer complete. And thank you so much for coming. I don't want to go with a question. Hilda, don't worry, even the small one can pay for some soda. Actually, that is the only appreciation I would want. I don't want anyone paying a lot of money. I want, if possible, we have a market where we have free trading and free training. Actually, I'm challenging NSCVC if they can also do free training. Roughly how many investors are there at NSC? Around 5 million. Is it 5 million? No. It could be more than that. But active accounts could be less. Huh? The problem is there are so many dormant accounts at CDSC. But in terms of activity, it's around 100,000 active accounts. The rest are dormant. Huh? People opened accounts. They are long-term investors. They no longer buy, but they have shares. NSC are charging 6,000 per day. Hey, hata mimi I think nitafikiria hivyo. And I'm foregoing 6,000. But I want to charge them. There is no need of them charging. Na it's good umesema for kids. I'm also starting for teenies. Still online. I'll see how I can fix it. Still free. Still free. Yeah, 100,000. That's what is there. The active accounts. Huh? And it's because NSC they made it so complicated that even a layman cannot know. Like if were it not for training, would just be placing orders blindly. You don't know what is intraday, you don't know what is remit, what is the risk of market. You see, at one point you are hit with losses, you end up giving up. But even I see they were to make this thing more of education than system. Trust me, it would have what is in international markets. Huh? But anyway, I'm there to make it easier. The videos will be available to everyone. Huh? With that, let's end there. I will upload the video and share the links for review. And also share now the training schedule for next week so that you can also plan ahead. You know which session you are able to attend. If you are not able to attend, I will still be repeating these sessions. With that, have a great weekend and let's see next week. And happy new week for trading. Bye bye.